Downgrade, the World Bank slashes its global economic outlook due to Russia's invasion of Ukraine, plus renewed assault. Ukraine's President Zelensky says Russian forces have launched an assault to seize the eastern Donbass region of the country.
Tom, let's take a look at the futures. Now, because we're reunited, and it's been a while we haven't been united, I was thinking the gods of the markets would give us a bit more optimism today, but actually they don't. Look at the DAX futures, look at, okay, the FTSE futures are unchanged, but the DAX are down 0.6%. It's all about dollar and, of course, Fed coming up.
Yeah, and we're seeing that pressure from the Fed, from that commentary from Bullard, of course, on the yen. We'll look at that shortly. The sell-off has been pronounced once again for the Japanese currency. The FTSE 100 in slightly better shape, as Danny Berger was illustrating for us before the end of the last hour, because of what's happening in the commodity space, particularly around copper. That is up. Supply disruptions from Peru, and of course the commodity exposure for the FTSE 100 playing out. Currently range-bound, down about 0.1% for the FTSE 100. Watch for the other indexes as they continue to open this Tuesday. You had thin volume stateside and some modest gains in the US session, of course, with the context, of course, that you were in the Easter holiday weekend, and many markets here in Europe, particularly in the UK, were closed. The French CAC 40 is down by 0.7%. The Spanish IBEX is lower by 0.5%, and the FTSE now lower by 0.2. We'll cross it over and see what's happening then as we lead up to the open stateside, and particularly focus on what is happening with the Japanese yen, which again remains under pressure, as we said in the headlines, because of that rate differential. So let's switch up the board and see how things are shaping up for the future stateside. S&P E-minis 439.8, up 0.2%, again building on the very modest gains that we saw in the US yesterday. The yields came off in the early part of the session. Now they're up just marginally for the US 10-year at 2.84. And of course, James Bullard coming out and suggesting that 75 basis points should be on the cards. It's not his base case, but it should be considered, should be one of the options. Goldman Sachs now factoring at about a 35% chance of a recession in the US in the next 2 years. Here's the yen, 127, and the drop of 0.8%. It fell a full 1 percentage point earlier in the session, 127.96. The next level, arguably, according to some of the strategists, is 130 for the Japanese yen. Again, that rate differential between the BOJ and the Fed just being underscored. Brent is currently at 112, down 0.4%. Natural gas prices in the States shooting up yesterday. Francine.
Tom, let's also look at some of the sectors on the move. Now, I do feel like I'm still in Venice on the gondola because not everything is working for me today, but I do see energy, one of the gainers, the only gainers we have in terms of industry groups. So we have about 2 industry groups that are actually seeing gains. That's energy and basic resources. Again, that's also dollar dynamic as we look into what's going on, for example, with grain over in Ukraine. And then all other sectors are on the downside. So the biggest losers, auto parts down 1.3%, healthcare under pressure, construction, retail, telecom. I could go on, Tom, but it's not looking pretty out there when it comes to equity stocks in general.
Individual companies in focus, Antofagasta. This again is on the back of that copper story. Disruptions out of Peru. The price has shot up this morning for copper. You've got 2 major mines in that country that have essentially closed off output because of disruptions there. Antofagasta gaining 1.9% currently, just in the first few seconds of the session. La Repubblica reporting that Crédit Agricole is going to make a move for BPM's insurance business unchanged as things stand for the French lender. And SCOR, this is the French reinsurance company, it's lower by 1.5%. Its earnings in the first quarter being hit for its exposure to what is happening in Ukraine and that Russian-led conflict. Okay, Fran, I believe we're going to cross over to MLive's managing editor, Mark Cudmore. Francine, I'll let you take over.
Yeah, Mark, with a great chart. I'm looking forward to your chart, Mark, because I know you're looking at dynamics in the yen, something that we probably need to pay more attention to.
Well, Francine, you guys have really focused on the micro story, and this week it is really all about earnings because we don't have much on the macro calendar. But yes, I'm a simple guy. I don't get into the companies. I stick to the macro. And in the macro space, it is all about the yen because this ties into the yield story. It ties into the commodity story. Now, I've been bashing the yen for a long period of time. I want to bash the yen from a new angle today and say that Japan is going to suffer an inflation problem, and the fact that BOJ is still in denial that Japan will also see inflation. I'm not saying a major inflation spiral like the US and Europe, but it will be above trend, and their extraordinarily easy policy that they're insisting on maintaining is completely out of place. So I'm going to use two charts to show you that today. The first one is the Bloomberg Commodity Spot Index chart in yen terms. So this is going back over the past 20 years. And you can see it's really gone parabolic. It's up more than 8% in the past week alone, up 29% since the end of February, up 48% year to date, and up 177% since the pandemic low. These are really, really quite extraordinary moves. And it's for this reason that Japan, a major commodity importer, is going to be importing a lot of inflation, and a lot of inflation that's not yet in the forecast. Consensus forecast for Japanese inflation were at 0.7% before the year started. They're now at 1.5%. They are still way too low. They're going to need to be revised a lot higher in the coming months. Now, let me show you one more chart why Japan's going to have an inflation problem, and that is the fact that everyone focuses on dollar yen, which is obviously one of the more traded ones, very important financially. If we can switch to the yuan yen chart, here we go. This is the chart of the yuan versus yen. Now, the reason I'm showing you this is that economically for Japan, this is actually more important than dollar yen. Dollar yen is part of the financial flows. That is part of the story. Indeed, a very important part of the story. But Japan does 80% more trade with China than it does with US. And with the US, it's mainly export. So when dollar yen goes up, it's definitely a net positive for the economy. But when yuan yen goes up, it's not. It's very much two-way inflation. Japan imports more than twice as much from China than it does from the US. And therefore, when yuan yen goes up, that means they're importing even more inflation again, and it's more of a cost for businesses, worse for the economy. So there are two charts to show that Japanese inflation is still being massively underestimated by economists.
Okay, underestimating Japanese inflation. Continue to watch that, the input prices in Japan, and whether that gets reflected in those consumer prices. Mark Cudmore, MLive's managing editor, thank you for alerting to that, us to the importance of that story. There's a redhead crossing the terminal right now, Stellantis, so think, of course, Fiat Chrysler, suspending its production in Russia, putting out a statement saying that it is doing this to ensure full compliance with all cross-sanctions and to protect its employees. Stellantis saying and citing the rapid daily increase in cross-sanctions and logistical difficulties. The stock listed in Italy currently down 6.2%. Okay, let's get back to the macroeconomics then. St. Louis Fed President James Bullard saying the central bank needs to move quickly to raise interest rates. He's looking for around 3.5% this year with multiple half-point hikes. But Bullard also says they shouldn't rule out an even greater rate increase.
I would point out that the 1994 cycle where we raised the policy rate 300 basis points in a year, and in that cycle, there was a 75 basis point increase at one point. So I wouldn't rule it out, but it's not my base case here.
Okay, let's get into what all of this means then for assets with our markets editor, Christina Kino, and Sharon Bell, Goldman Sachs, Managing Director for European Equity Strategy. Christine, let's bring you in at this point. We know he's the uber hawk, Bullard, pointing to a 75 basis point hike. How realistic is it? He says it's not his base case.
Absolutely, Tom. And I think we're not really seeing that getting borne out in pricing in markets at the moment. In fact, actually, we're seeing a little bit of pairing in terms of how much markets are expecting from the Fed for this year. We're closer now to 200 basis points versus 225 basis points, which we got to a couple of weeks ago. And I think what we're seeing in markets at the moment is a little bit of Fed fatigue because, you know, we've seen policymakers really up the ante repeatedly, markets responding to that initially, but now it feels like until we get to that May meeting and until we see the Fed actually deliver what they've been saying they're going to be delivering, which is potentially a 50 basis point rate hike, I think markets are happy to take a bit of a pause here and look at other factors beyond the Fed for the moment.
So, Christina, how much pain is there left for yen, for example?
Well, Francine, yeah, I think that in particular is still a developing story. In a lot of ways, the yen move, I think, is a bit of a catch-up to what we've seen in the yield space, in the rest of the G10 currency space earlier this year. And it really boils down to how markets are thinking about the BOJ's next steps. You know, we've seen repeatedly this dynamic of markets daring central banks to perhaps get a bit more hawkish than they had been previously. And that is very much the case for the Bank of Japan. It is still one of the most or the least hawkish central banks on the spectrum, globally speaking. And we're now seeing the same situation where markets are kind of pushing the Bank of Japan to finally get on that hawkish train, finally get on that normalization train. And I think markets are also saying that talk from the BOJ at this juncture is not going to be enough.
Okay, Sharon Bell, co-head EMEA Global Investment Research Equity Strategist at Goldman Sachs. Let's bring you in at this point then. The line there from Bullard on the 75 basis points, he's not ruling it out. He says it should be being considered at the least, even if it isn't his base case. And then, well, of course, we had Bill Dudley saying, look, in order to get inflation down, you're going to have to take a hit to the economy. There will be a recession. What do you make of these hawkish calls and this hawkish commentary, where it leaves the way we should be thinking about the Fed come May?
Well, I mean, we think that they won't go 75, but of course there's a risk that they do. We think that the Fed will go 50 in May and another 50 in June. So a much faster pace than we expected a few months ago, given the higher inflation rates that we've been seeing. So absolutely, the Fed needs to slow the economy, given where inflation is at the moment.
Sharon, the earnings, the earnings season kicks off next week. How much of a wobble will they have if inflation goes up? What are you looking for? Is it margins, and is it inventories? Is it something else?
Look, I think actually the first quarter earnings will probably be okay. My main focus is on Europe, and actually, you know, European growth in the first quarter will probably be absolutely fine, even with these high rates of inflation. And there's a couple of reasons for that. I think sort of the pace of recovery out of COVID and the pandemic and the lockdowns, etc., has been quite good and strong, and you will see some sort of good top line growth from that. Also, there's lots of companies in commodity areas that really benefit from these higher prices. But I do think we'll start to see some bit more of a hit in the second quarter and beyond as this kind of tightening cycle really kicks in. And we haven't really had a chance for that yet. The tightening's only just started to happen in the US. We haven't even seen it start really for most of Europe. So as the tightening cycle kicks in and you start seeing slower growth perhaps in the middle, second half of this year, then I think you'll start seeing a little bit weaker outcomes for earnings. But this first quarter, reasonably okay. You're right, though, that the big question will be margins. So any commentary on margins from the company's management is going to be the thing people concentrate on.
Okay, the importance again of margins. And Sharon, we've seen arguably relative resilience across the equity space to these high yields. 285 currently on the US 10-year, 243 on the 2-year, this bearish steepening that we've been seeing across the curve. Where is the fragility in the face of these high yields? When does that resilience that we've seen start to break down, and which sectors are most vulnerable?
It's a great question, and it's the question we're getting probably most of all questions at the moment. I mean, first of all, markets are down year to date, mainly. I mean, you mentioned the resilience of the FTSE 100 earlier, and that's been the most resilient market. But generally speaking, equities are down, and I think that reflects these concerns that we all have. Growth is going to slow, the recession risk has gone up, interest rates are rising, etc. But I think that equities have been more resilient than perhaps people expected. Perhaps we would have expected a bigger bear market by now. And I think there's two reasons for that. One is that we are still seeing recovery out of the pandemic. We are still seeing in Europe, for example, lots more fiscal spend this year. So monetary policy perhaps will start tightening, but fiscally we're seeing a bit more expansion. So a bit of a reopening recovery, a bit of a fiscal expansion. And then, of course, you've got the side of the economy which is still very strong. The labour market, very, very tight. Unemployment is pretty low, historical lows in the euro area, for example, coming down quite fast, and it's pretty low in the US and the UK. So you've got full labour markets, some rising wages, even if it's not keeping pace with inflation. And you've got this reopening and fiscal spend. So all those things help equities. And then you've got this slice of the market, particularly true of FTSE 100, which of course is exposed to higher commodity prices as well and benefits from that.
All right, thank you both. Christina Kino there from our markets editor, and staying with us, Sharon Bell, Goldman Sachs Managing Director for European Equity Strategy. Now, China's central bank announces measures to help businesses affected by COVID lockdowns. We'll have that story next, and this is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Welcome to the Open, everyone. 15 minutes into the European trading day, and we're seeing a bit of pressure across the board with the European stock 600 down 1%, similar losses for the DAX. Again, traders and investors really weighing Chinese measures to support the economy, but also the prospect for faster Federal Reserve policy tightening to fight inflation. So they're trying to figure out where we end up. Another stock that we're also watching is Stellantis, saying that they have suspended their production in Russia. You can see Stellantis down 6.2%. They're, I think, also going ex-dividend in today's trading session. So that may have a bit of an impact on what the share price is doing.
And Francis, you touched on China, the central bank there announcing a spate of measures to help an economy which has been hit by lockdowns to control the current COVID outbreak. But the focus on boosting credit likely means the chances for broad-based easing that some are calling for are shrinking. Join us now is Bloomberg's Alan Wan. Alan, this is a lived experience for you. Let's just start with the lockdown and then we'll get to the measures from the PBOC. You are in Shanghai. You've been part of this lockdown. You've faced the food shortages that many in that city have had to contend with. Talk us through the measures that have been announced then from the PBOC and how it relates to your lived experience on the ground in Shanghai.
Yeah, the measures are really just aimed at providing a floor for the economy after yesterday's GDP data. I mean, the top line GDP numbers were good, but there are actually some disturbing elements in the data, which I will discuss maybe later. But the measures are aimed at boosting the lending, particularly to small companies and support industries that have been battered by the outbreaks. For example, the government is going to encourage banks to extend loans to logistic firms and truck drivers, and emergency loans for industries such as airlines and airports. And for those who are locked down who own homes, banks are being encouraged to defer their mortgage payments or extend the mortgages for people in these quarantine arrangements, along with helping folks who have lost their jobs during this pandemic. I should add, though, there are also measures not related to COVID as well. There are measures also to encourage the use of the cross-border yuan, which is, something that's not been focused during the war in Ukraine.
Yeah, I mean, we'll go through a lot of these 23 measures in this latest bid to revive China's economy. Alan, thanks so much. Alan Wan there on the ground for us. Now, back with us is Sharon Bell, Goldman Sachs Managing Director for European Equity Strategy. Sharon, I don't know how much exposure to China makes you worried about what's coming, or just the fact that we were maybe expecting some kind of general easing from authorities in China, and if they do more targeted credit loans, then we won't get that general easing, and what that means for European equities.
Yeah, so Europe is quite exposed to China in many ways. I mean, this is no big surprise. Everywhere in the world is exposed to China, really. It's now a very large economy. European companies sell about 10% of their overall pot of sales to China. So it's quite a big sort of direct influence if China is not growing as fast, if China slows down, for example, if China locks down portions, which we've seen, that's going to hit European stocks with exposure there. And absolutely, we've seen that. The slices of the market which are most exposed to China have started to see some hit there. So I think, yeah, to the extent that you see China ease policy ultimately, and that helps boost growth in China, it's going to be a benefit to European stocks. But to the extent that there isn't enough easing, or you get some property deflation, or you see further lockdowns, and that hits obviously European companies with a lot of exposure. But it's not just sales exposure, it's also supply chain exposure too. We know how tight supply chains are, so that hits margins, is what we were discussing before. So I think there's lots of interconnectivities with China.
Okay, the continued risks coming out of China, those interconnectivities, as you're talking about, Sharon. I know that you and the team are looking at revisiting the yield play, particularly around dividends. Just unpack that for us and where you're finding the most exposure and the most opportunity when it comes to that dividend play.
Yeah, absolutely. We quite like the idea of investing in companies with high yields and good dividends. Why do we like that? Well, times of uncertainty, one thing. So dividends is something which they're definitely not guaranteed. But dividends, when payout ratios aren't particularly high at the moment, so companies can afford their dividends. Their balance sheets are reasonably good, the corporate sector. So again, that would suggest that companies can afford to continue paying dividends, even if they see a little bit of a hit to their margins. Also, dividends are paid out now rather than kind of uncertain capital gains a long time in the future. So all those reasons make us think actually dividends are quite precious right now. And I think that the idea of companies focusing a little bit more, I guess, shorter duration companies, which is what high dividend yielding companies are. They're companies that are paying you now rather than you promising you lots of growth in the future, which is very uncertain. And when interest rates go up, sorry, yes, go on.
No, go ahead, sorry.
I was going to say, when interest rates go up, that uncertain growth in the future, you discount it back by higher interest rates. It's worth less today. And that's particularly true for tech companies or long duration growth companies, whereas high dividend yield companies are promising you something this year rather than in 10 years' time.
And sure, given all of that, you like the UK?
Yeah, absolutely. I totally agree. So in terms of implementation, one really easy way to do it would be buying FTSE 100, wouldn't it? Because this gives you a dividend yield of 4.5%. A lot of the companies are extremely high yield payers. They're in sectors which have always paid high dividends, commodity sectors, for example, financials. So I think the UK is one expression, or buying, higher yielding stocks in other sectors.
Okay, Sharon Bell, Goldman Sachs, Managing Director for European Equity Strategy, on the opportunities when it comes to dividends. And here in the UK, the FTSE 100 in today's session down 0.1%, performing far less badly than the rest of the indexes. Thank you, Sharon, as ever. Coming up later on this hour, the latest on the war in Ukraine. We're going to speak to Sir Richard Shirreff, NATO's former Deputy Supreme Allied Commander for Europe, about the next stage in this conflict just after 8:30 a.m. London time. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. We are 25 minutes into the European trading day. You're seeing losses across the benchmark, the European Stock 600 of 0.9% or thereabouts. Slightly less bad pitch on the FTSE 100, supported by what's happening in the basic resources. Copper is higher this morning. The UK and the FTSE 100 down just by about 0.1%. But the bloodletting really being felt in the FTSE MIB over in Italy, down more than 1%. Over in France, the CAC 40 down 0.9%. We, of course, continue to watch the politics as we lead up to that final vote for the presidential elections on April the 24th. The DAX down 0.8%. Future stateside, S&P E-minis looking at gains of just over 0.1%. Let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Goldman Sachs' youngest black partner is leaving to start his own fund. 35-year-old Darren Dixon's move adds to a string of exits from the bank's already small pool of top-ranking black executives. Sources tell us Dixon, who was most recently head of Global Capital Solutions, is in talks with backers to start an infrastructure-focused fund. Twitter shares posted their biggest gain in 2 weeks after launching a poison pill defense to thwart Elon Musk's unsolicited bid to take the company private at $54.20 a share. Separately, a report from Dow Jones says Apollo Global Management has held discussions about backing Musk's bid for the social media company. That's the Bloomberg Business Flash. Tom.
Okay, Laura, thank you very much indeed. Coming up, Sylvia Merlet, head of ESG and policy research at Algebris Investments, on the global economic outlook. That after the World Bank downgraded their views on the global economy. That interview is next. This is Bloomberg.
The end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Need for speed. St. Louis Fed President James Bullard says he would not rule out a 75 basis point rate hike, helping to send the yen on its longest losing streak in half a century. Growth downgrade. The World Bank slashes its global economic outlook due to Russia's invasion of Ukraine. Plus, renewed assault. Ukraine's President Zelensky says Russian forces have launched an offensive to seize the eastern Donbass region of the country. Now, Tom, when you look at the markets, it's extremely interesting. I mean, the markets are basically looking at China and saying, right, they put these 23 support measures, and then they're looking at the hawk, James Bullard, saying, wait, 75 basis points?
Yeah, is the sell-off in the yen as a result of Bullard's comments really justified, given we know about his hawkish tendency? 75. He said it's not his base case.
No, but 75 basis points.
Let's consider it. Let's weigh it up. And we know, of course, that markets are increasingly looking to a 50 basis point hike come early May. That is the next meeting, the next decision, of course, from the Federal Reserve. But it really underscores just how much sensitivity there is to these markets, to the Fed speakers, and we have more of those coming out today and through the rest of the week. The European benchmark is down 0.9%. You had very thin volumes in the US yesterday. Of course, most European markets in the UK were closed for the holidays, 0.9% lower across the benchmark. There is some differentiation, though, across these indexes, particularly when it comes to the sectors. One sector, and the last time I checked a couple of seconds ago, which stands out, is basic resources. We'll look at that shortly. The DAX is down 0.8%. The FTSE 100, as a result of what's happening in basic resources, just lower, just by 0.1% or 9 points. Let's switch it over then and look through how things are shaping up for these sectors 30 minutes into the trading session this Tuesday, a Tuesday that, as Francine is saying, feels a little bit like a Monday. In terms of the sectors that are near the top of the list or at the top of the list, basic resources, I say, up more than 1%. Energy as well. The two linked, you saw that spike in energy and natural gas prices stateside. You've seen Brent and WTI comfortably above the $100 a barrel, about 108 for Brent. But of course, copper and supply disruptions out of Peru, that is fueling higher copper prices, and that's building into that basic resources page. And the rest of the sectors, of course, in the red, most prominently consumer products, travel and leisure and media, all down by more than 1%. Goldman Sachs saying they see there's a 35% chance, approximately, of a recession in the US over the next 2 years. And of course, we continue to watch out for additional Fed commentary. Fran.
Now, the World Bank, Tom, has cut its global growth outlook as war in Ukraine and COVID takes their toll.
Array of disruptions from China's new lockdowns, from the impacts yet to be fully felt of the Russia-Ukraine war on food prices, on global supply chains. And if bad came to worse, could there be another episode of financial contagion? All these are risks on the downside.
Well, joining us now, Sylvia Merler, head of ESG and policy research at Algebris Investments. Now, Sylvia, thank you for joining us. You also look into the minutiae of what inflation means because of some of the grain and, of course, blocked because of the invasion of Ukraine. 75 basis points. Is this a real possibility, or is James Bullard just always 25 basis points ahead of what will happen?
I think, I would tend to agree with the latter statements. I mean, we know Bullard is obviously on the most hawkish side, but generally speaking, I mean, leaving aside the 75 or 50 basis point, there is a lot of confusion as to the growth and inflation outlook both in Europe and the US, and this is clearly it's visibly showing on the markets and the movements that you have described so far.
Silva, we're increasingly hearing, at least in the last few hours, from the Italians and the French around a possible oil embargo on Russia. We'll have to see, of course, whether Germany gets in line with that. What would the economic consequences for the Eurozone be if we get to that point?
I mean, it's obvious Europe is strongly dependent on Russia for its energy import, but the biggest, obviously, dependency is on the gas front. So the oil front would matter, but not as much as the gas, potential gas embargo that has been discussed by now for several weeks, and still no agreement can be found. It would certainly be relevant. But not the biggest measure that you could think of. If we were to get to a point where all energy is embargoed, where Europe decides to unplug itself from Russian energy, that could, in the short term, have a very sizable effect on the European economy through two different channels. So there's obviously a quantity channel, meaning you would have to find alternative sources for the energy that you're not going to buy from Russia anymore. And it's unclear how much is actually substitutable in the short run. We estimated that up to 60% in terms of gas could be substituted from different sources, but that would come at a very, very much higher price compared to what Europeans are paying today. So that would obviously have a negative impact on growth as well. And on the other end, there's a longer term issue of transition that's also structurally pushing inflation high. And we expect to keep pushing inflation higher in the longer term.
So do you see actually an oil embargo on either way in the next couple of weeks? What's surprising to a lot of people is that we've tried to freeze out Russia, but it also seems that Russia is trying to freeze itself off, for example, asking a lot of their companies to delist from the international listings. So could they go a step further and actually stop selling gas?
I think this is the biggest surprise probably for most observers of this conflict so far. So very differently from what happened during the Russian crisis in 1998, where it was clear that Russia was under severe economic strains, but it really wanted to keep its integration with the West, to send the signal that it wanted to remain integrated in the global economy. This seems to be much different. It seems to be a move in the opposite direction. So Russia deciding to somehow cut itself off, and we see it in a number of things. That the listing is one, but also the recent Russian default, so the choice of paying in rubles on some of the government debt coming due, even though Russia has no shortage of hard currency because it makes $1 billion a day from the sale of its energy. So it's definitely something that produces a dollar surplus and a current account surplus. It's a political choice. So yes, I would not rule that out. The recent request for payment in rubles, I think, goes in the direction of giving Russia more leverage on weaponizing the uncertainty of energy supply to Europe in particular. And it might as well end up there, so that after having strongly divided the European camps on whether Europe is willing to go the length of cutting itself off Russian energy, Russia actually moves first.
Silva, we saw President Putin over the weekend suggesting that the sanctions have failed against Russia, and of course the current account surplus is in pretty rude health at this point. You've been touching on that. For how long does that current account surplus for Russia continue to offset the sanctions impact?
Well, I mean, Russia clearly shows that it's very difficult, if not impossible, to force a sudden stop on a current account surplus economy unless you're willing to take a significant domestic economic hit yourself in the process, which is precisely what we're seeing in Europe. And then the only way that current account surplus can be diminished is if we take the politically very difficult decision to stop importing the one good that's creating that current account surplus, which is energy, because otherwise what you naturally have is depreciation of the currency reduces import, the prices of energy skyrocketing increase the value of exports, and your current account surplus magnifies. It becomes bigger and bigger. So in that sense, you could say sanctions have failed to the extent that one of the purposes of sanctions was to make it more difficult for Russia to access foreign currency. This is something that this sizable current account surplus allow them to replenish. They can replenish those reserves that they have lost access to. And also, if the purpose was to put immediate financial pressure on Russia, this is also something that the energy component allows them to not feel for quite a long period of time. That said, there have been impact domestically. We've seen inflation rates increasing on the number of goods in the Russian CPI basket. One thing to notice there, however, is that this increase is not widespread across the entirety of the basket. So there are some goods that have increased quite sizably. This is mostly things that are imported or that you could consider luxuries in a way, but basic staples, they remain fairly stable in terms of their pricing. So it's also a question of who will feel the heat from this, and how long will it take for this to become widespread and really visible in the life of the Russian population broadly.
Okay, Sylvia Merlet, Head of ESG and Policy Research at Algebris Investments. Thank you for walking us through the economic impacts of the continued conflict, of course, in Ukraine, Russia, on the Eurozone and Russia itself. And Francine, I was recently in Greece. I know you've been away as well. We arrived in Santiago Square. There was a protest against the war, but also the taxi drivers talk about inflation without much prompting. It's clearly a concern for people on the continent.
Yeah, and it could actually be a very decisive factor in the French election, which the second round is on Sunday. And we know that Marine Le Pen, who's a nationalist, has always said, look, I will take care of you in dealing with inflation. I would suggest everyone watch the debate. Emmanuel Macron, Marine Le Pen, it's on Wednesday. So that could really be a decisive moment for the French elections. Coming up, the latest on the war in Ukraine, we speak to Sir Richard Shirreff, NATO's former Deputy Supreme Allied Commander for Europe. That's coming up next. And this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the Open, everyone. We are 43 minutes into European trading day. We were looking at equities quite extensively, travel and leisure stocks leading the decline. When it comes to bonds, a bit of stability, but of course we could be in a surprise when it comes to treasuries. The Italian 10-year yield, 2.492. I would suggest also everyone go and read the Mario Draghi, one of the very few interviews actually he's given over the weekend, where he lays out the strategy for Italy when it comes to Ukraine and, of course, the reliance on gas. So something really interesting. And then the UK 10-year yield, 1.925. It's the first time, Tom, that Boris Johnson speaks to Parliament today since he was fined for breaking those lockdown rules.
Yeah, he's under pressure, isn't he, from his own lawmakers who had previously suggested, prior to the war, of course, suggested that they might be willing to oust the Prime Minister if he faced legal action. Of course, he has been found to have been, ready and willing, at least, or at least liable for those fines.
50 pounds.
50 quid. I think he can afford it, but we'll see what the political ramifications are as we lead up to those local elections in May. Let's get back, though, to the geopolitics of Russia and Ukraine, the latest there. President Volodymyr Zelensky says Russian forces have begun a new campaign to conquer the east of the country.
Russian troops begun the battle for the Donbass, for which they have been preparing for a long time. A significant part of the entire Russian army is now concentrated on this offensive. No matter how many Russian troops are driven there, we will fight.
Meanwhile, Russian President Vladimir Putin says Western countries have hurt their own economies with sanctions against Moscow.
We can now confidently say that such policy of sanctions towards Russia has failed. The economic blitzkrieg strategy didn't work. Moreover, the initiators themselves couldn't get away with the sanctions. I'm talking about inflation and unemployment growth, and economic dynamics worsening in the US and the European countries.
Joining us now is General Sir Richard Shearer, former NATO Deputy Supreme Commander in Europe. Sir Shearer, thank you for joining us this morning. How pivotal is this next stage in the conflict, and what, with your expertise and expert eye, are you going to be looking at?
This is going to be a decisive phase. Whether it's the decisive phase, of course, remains to be seen. But the Russians have announced, having failed in the Battle of Kiev, that they would now focus on the east of the country. Bear in mind, of course, that Putin has got his big parade on the 9th of May, the Great Victory Day parade. So he's going to want something to show for it. On the other hand, the Ukrainians have had time to prepare. They've been fighting in the east for 8 years. They've had plenty of time to prepare really well-organized defensive positions. And they're motivated. And not only that, but they've demonstrated in the earlier battles a remarkable ability to match their strength against Russian weakness in almost an asymmetric way, targeting supply lines through the use of armed drones, light anti-tank weapons, and the like. And we saw how the Russians floundered around in the battle for Kiev. A complete failure to develop a combined arms operation, a failure of logistics, a failure of command and control. So while the Russians have enormous strength, they are numerically stronger. The Ukrainians have a morale, they've got the victory behind them, and they're defending their homeland. So this is not going to be a straight run for the Russians by any means.
But General Sheriff, what does that mean? How is it possible for, I guess, a lot of leaders around the world to try and deter Russia, given what we've seen so far?
Well, what the rest of the world should be doing, and the NATO, the West, and all supporters of Ukraine, is really ramping up the support with military aid. And we're talking here not only the anti-tank weapons and anti-aircraft missiles, shoulder-launched, that the Ukrainians have used to such devastating effect, but we're also talking about long-range artillery, long-range missiles, precision strike, precision fires. We're talking about anti-aircraft missile defense to protect Ukrainian cities against the ever-present scourge of Russian missile attack, as well as tanks and armored vehicles, in order to help the Ukrainians build up an offensive land maneuver capability. Because without an offensive land maneuver capability, they won't dislodge the Russians from Ukraine.
So, Sheriff, clearly a factor that is holding back some NATO members is the threat, the nuclear threat that emanates from Moscow. If you were sitting in the room and advising, how would you characterize that threat for our leaders?
Well, it is a very real and present threat, and Putin has used very loose language. Medvedev has used very loose language about the nuclear threat. And we know that the Russians integrate nuclear thinking into every aspect of their military doctrine. So it is a real issue. But I think now is the time for NATO to take risk on one proviso, and I'll come back to that in a moment, because this is a window, there is a window of opportunity here with this forthcoming battle of the Donbass. If the Ukrainians can have the support they need to really cause massive attrition on the Russians, to break up those Russian attacks before they start to deploy, and to inflict a humiliation on the Russians, then I think the balance changes significantly. But for one proviso, NATO must take account of before it takes risk is that NATO has got to be ready for the worst case, and the worst case is war with Russia. And that means that NATO has to mobilize all the forces at its disposal. It needs to put all the forces it can onto its eastern flank to deter Russian attacks, whether by land, direct land-based attacks, or indeed missile attacks. And it must adopt a mentality that says that we're in this for the long haul. There can be no peace in Europe while Putin is in the Kremlin. And NATO's long-term strategy must now be to prevent what is a hot war in Ukraine becoming a cold war, a hot war in Europe. And that means a new Cold War, and it means effective deterrence.
I mean, is this more dangerous than the Cold War? And how does this end? If Western leaders of NATO can't get China to be on their side, how much support will Russia have in continuing this advance?
Well, it is more dangerous than the Cold War, certainly the later stages of the Cold War, because the later stages of the Cold War, and particularly the late 70s and 80s, there was almost a sense of a balance of power in Europe. Yes, it was dangerous, but there was communication, and there was an understanding of the rules of the game. There are no rules of the game here. There is very little communication, or no communication effectively with Putin. And not only that, in Putin you have a man who is obsessed. He is obsessed with building a new Russian empire. He is obsessed with turning around the collapse of the Soviet Union. And that is why he wants to eliminate Ukraine as a state and incorporate it into the Russian Federation. So it is seriously dangerous. But nevertheless, we shouldn't take counsel of our fears. The way to preserve peace is through effective deterrence, targeting the mind of Putin to make it so that he understands 100% that if he steps across the line, which is attacking NATO, he will attract overwhelming strength on his head. Not only military, you've just been talking about the economic. The economic side also, of course, needs to be ramped up too.
Thank you so much, General Sir Richard Sheriff, former NATO Deputy Supreme Commander for Europe.
Okay, coming up, Bank of America reports a better than expected first quarter, wrapping up the season for big bank earnings in the US. We're going to break down the numbers next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The consumers are sitting on lots of cash. Why is this true? Well, you know, high wage growth, high savings, limited by limited enabled spending. What it means is a long tail to consumer spend growth.
Well, that was Bank of America Chief Executive Officer Brian Moynihan saying that consumers are sitting on lots of cash and more spending is coming. He spoke on the lender's first quarter earnings call on Monday after the bank reported better than expected results. Well, let's bring in Bloomberg's Charlie Wells to break down the latest on U.S. bank earnings. Charlie, good morning. Thanks so much for joining us. So Bank of America, the last to report one of the major U.S. banks this quarter. How are analysts, what are they saying about the sector's performance overall for the first quarter?
Yeah, so more broadly, it seems like there was such low expectations going into this earnings week, right? The number one issue of the quarter was certainly Russia's invasion of the Ukraine, and that just created so much uncertainty from deal flow that we've been hearing about early in 2022 about volatility. And it seems like some banks were able to capture some of that volatility in a positive way. It's unclear if that's going to be long term, but low expectations that seem to be slightly exceeded, particularly here in the case of Bank of America. So analysts were expecting earnings of 74 cents a share. Bank of America got it up to 80, which is pretty good.
Charlie, what are you expecting second quarter more broadly for the banking sector?
Yeah, so thinking about Bank of America, what was really striking is their sort of shift toward the consumer, toward consumer lending, a hope for more net interest income. So they are projecting a 20% increase in this quarter. Now, Bank of America, of course, has a lot of exposure to consumers, a lot of consumer deposits. That's not the case with a lot of these other large banks. Other banks we saw over the quarter post, more revenue than expected from trading. As I was saying, will that continue or not? I think that's the big question going into this new quarter.
So what should we expect from U.S. banks more broadly in the second quarter?
Yeah, that is a really excellent question. I think the concern is about, the uncertainty, right? We're hearing the World Bank chief economists talk about continued uncertainty. What does that do to the deal pipeline that we had been hearing so much about earlier this year, right? We know investment bankers are always optimistic about deals, but we saw, for instance, at Bank of America talking about a 35% decline in revenue from investment banking. That was fairly representative of other large banks in the United States. So where are the deals?
Bloomberg's Charlie Wells. Thank you very much. I feel cheated. I thought you'd come on to talk about your Paris sojourn, your trip to Paris. We've all been on holiday.
The French banks.
In a holiday mood.
Yes.
French banks. We'll get to the French banks next.
Pourquoi pas?
Pourquoi pas? There you go. Tom Keene only knows how to say où est la bibliothèque? Où est le European market open? Surveillance is up next. This is Bloomberg.
About what they call black soot
caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Russian troops begun the battle for the Donbas, for which they have been preparing for a long time.
If, bad came to worse, could there be another episode of financial contagion? All these are risks on the downside.
A 75 basis point increase. I wouldn't rule it out, but it's not my base case here.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Even more hawkish, St. Louis Fed President James Bullard says he would not rule out a 75 basis point rate hike. Growth downgrade, the World Bank slashes its global economic forecast due to Russia's invasion of Ukraine. Plus, renewed assault. Ukraine President Zelensky says Russian forces have launched a campaign to conquer the Donbass region. Now, first thing is first, so let's check on the markets. Of course, two things that traders need to weigh. First, that PBOC measures. We have 23 of them. What we could, or what it could mean is that we're not expecting some kind of broad-based, support for the economy, but it's targeted and targets loans. And the other thing, of course, is the hawkish comments from the Federal Reserve. Of course, Mr. Bullard, Mr. Hawk as well. So take that with a pinch of salt, but certainly markets are trying to reprice and relook at what we see at the next meeting. Jay Powell did say we could see 50 basis points May 3rd, 4th. The European stocks, 600 down some 0.8%. Tech, one of the biggest losers. The U.S. 10-year yield, you can see pretty much steady. And then a lot of this inflation forecast repricing is actually playing out on yen, 128.08. If you look at the European map, and we were having a good conversation with Sharon Bell over at Goldman Sachs, she was saying, look, you can play the dividend play. She's head of equities for Europe, and she was looking especially at the FTSE because a lot of the commodity-rich, of course, companies are also very good when it comes to paying out dividends. And you can see the FTSE for the moment, one of the best performers in today's trading session, because you have the DAX down 0.4%, the CAC 0.6% lower, and the FTSE is pretty much flat. Now, Bullard, the hawk, the St. Louis Fed President James Bullard says the central bank needs to move quickly to raise interest rates to around 3.5% this year, with multiple half-point hikes, and that it shouldn't rule out even greater rate increases.
I would point out that the 1994 cycle, where we raised the policy rate 300 basis points in a year, and in that cycle, there was a 75 basis point increase at one point. So I wouldn't rule it out, but it's not my base case here.
Well, joining us now is Octavio Morenzi, founder and chief executive of Optimas, and Bloomberg's Christine Aquino looking at the markets. Octavio and Christine, thank you both for joining us. Octavio, when you look at some of this inflation talk, the repricing, and everything that we're seeing in between, I know you look at specific bank stocks, but are equities just overvalued?
Well, I think the Fed and other central banks are going to have to ratchet up interest rates at a greater rate than they have so far. I mean, Bullard is certainly the most hawkish member of the Fed Board of Governors to talk, but I don't think he is sort of in a unanimous position there. There's all sorts of different opinions within the Fed Board of Governors in terms of where things should go. There's some people making fairly dovish sounds about where interest rate policy should go in the future, claiming that inflation has now peaked and everything's going to be okay. But I think that's more wishful thinking than anything else. I think the Fed is going to have to increase interest rates harder and faster, certainly in the latter part of this year, the latter half of it. And that's going to have a very bad downside effect on equities and bond prices quite directly.
Christine, when you look at some of course, the downfalls in today's equity markets, I mean, it's basically James Bullard, but again, he was a lone dissenter in that 8-1 decision, saying that we needed to increase interest rates more last time around.
Absolutely, Francine. And I think what we really are seeing here is kind of diminishing returns. I call it Fed fatigue in terms of the market's reaction to what we've been hearing from the FOMC members. You know, I think at the start of this month, there was a lot of reaction, particularly in the equity market, to the realization that multiple FOMC members are very much on board with the idea of a 50 basis point rate hike or multiple 50 basis point rate hikes. And we've seen markets, especially equities, really reprice it accordingly. We saw a lot of negative reaction at the start of this month. I think heading towards the next couple of weeks into that crucial May Fed meeting, I think it's a little bit more of a mixed picture. Because again, you know, that repricing initially has already occurred, and we're hitting a situation where Federal Reserve officials could keep upping the ante, but until markets actually see them deliver those rate hikes, it could potentially be in a bit of a holding pattern.
And Christine, we see this divergence play, which is why we're seeing the yen move quite steadily. But, you know, the difference between BOJ and the Fed, but you could say that with a number of also, you know, PBOC and Fed. So divergent works.
Absolutely, Francine. I think it really is that kind of theme that's resurfacing once again, particularly versus the Asian central banks and the Fed. Of course, we know, you know, the China Fed divergence was something that I was particularly interested in at the start of this year, because we already got those easing signals from the PBOC, and indeed they're adding to that right now, and especially appropriate given what we're seeing in terms of the China COVID situation. But yeah, the yen is a bit of a surprise, I think. It has got a lot of investors at a surprise, because it really, I don't think anyone has expected it to weaken this much and this quickly. And I think that's what's worrying the Bank of Japan at the moment. And, you know, they're not new to this idea of pushing back against the market in terms of its currency moves. But I think at this point, what's different is that it's not going to be enough for them to just keep talking to investors and talking, I guess, talking up the yen in this case. I think they're going to have to deliver some action, because that's what markets are looking for.
Yeah, at some point you can talk the talk and then actually deliver with actions. Octavio, what does this all mean for how you're looking at markets? We'll talk about banks, and of course inflation is a double-edged sword for a lot of these big banks that you follow. But is there anything that looks particularly attractive?
Well, I think Christine raises a very interesting point there. Is of course, the central banks have been talking about things coming in the future interest rate hikes and future reductions in terms of balance sheets and these enormously bloated balance sheets. Certainly that's the case with the Fed, and that's the case with the ECB, a bit less with the Bank of England, who's sort of taken more decisive action on that front. So I think against that backdrop, as you see interest rates keep going up, and I think they will have to go up more aggressively, I think it's going to be bad for all asset classes. So I think there's going to be a major adjustment there at some stage in this year, probably in the next 3 to 6 months. We're going to see some ugliness in the markets, and that's going to hit all asset classes as those interest rates have to get ratcheted up. So I don't think it's a good place to hide assets right now. Cash is looking like a really good place to be. I don't even think bonds are a good place to be at the moment. So that's going to be a bit unstable there, I think, as well as interest rates go up. So it's looking right now as cash is a very safe place to be. Not an attractive place, but that's about the safest at the moment.
Cash in what currency?
Well, I think dollars is looking pretty good at the moment. Dollars or euros even are looking pretty good. Now, inflation is, of course, eating into that, so it's an uncomfortable position to be in. But I think the other downside risks look even worse at the moment. So I think having a sizable portion of the portfolio in cash right now looks like a sensible play, and waiting then for the central banks to start lowering interest rates again. But that's going to take some time before we see that happen. So that's way out into the future. But I think sitting on the sidelines now is probably the smartest thing to do.
And Christine, when it comes to China, I mean, this is a whole other story that we need to look at really attentively.
Absolutely, Francine. I think, the situation really seems like it's deteriorating economically speaking, and very much a result of what we've seen in terms of lockdowns. The PBOC, of course, again, adding to their easing slant. They're adding more measures to support the economy, and we could see that play out a bit more, probably more discussions around the RRR rate and whether there's going to be more cuts coming, whether there's going to be more support coming, and really just driving that divergent story between China and the Fed. That's going to be really, really interesting to look at for the rest of the year for sure.
Thank you both for joining us. Bloomberg's Christina Aquino and Octavio Morenzi, founder and chief executive officer of Optimas. Coming up, Bank of America reports a better than expected first quarter, wrapping up the season for big bank earnings in the U.S. We break down the numbers next. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Consumers are sitting on lots of cash. Why is this true? Well, high wage growth, high savings, limited by limit-enabled spending. What it means is a long tail to consumer spend growth.
That was Bank of America Chief Executive Officer Brian Moynihan saying that consumers are sitting on lots of cash and more spending is coming now. He spoke on the lender's first quarter earnings call yesterday, after the bank reported better than expected results. Now, still with us, Octavio Morenzi. He is founder and chief executive officer of Optimas. Let's also bring in Bloomberg's Charlie Wells to break down the latest on U.S. bank earnings. Octavio, I have like 1,000,001 questions about where banks go from here. But first of all, Charlie, when you look at Bank of America, the last report out of the major U.S. banks, not too bad.
Yeah, better than expected, but not by a mile, right? So analysts surveyed by Bloomberg had been expecting earnings of 74 cents per share. Bank of America got up to 80, so that's pretty good. You saw some net interest income increases, about 13% there. You saw a real star there in their equities business line, so that was up about 10%. But of course, investment banking revenue was down 35%, very much in line with the sector. Not great news for deal makers.
So Octavio, this is your wheelhouse. I mean, you spend your days looking and piling through these earnings and choose U.S. banks. What's your favorite right now?
Well, I think Bank of America certainly stood out as being one of the few ones that actually showed an increase in revenues. It was very small. I think it was only a couple of percentage points, but most of the others saw declines in the high single digits and maybe even more. Goldman Sachs even more severe. With Goldman Sachs, I think you can ignore it a bit because it's very dependent on their private equity investments and direct investments that they hold. So that's a big factor there. But overall, we saw basically sort of high single-digit declines at most of the banks in terms of revenues, and Bank of America bucked that trend. The other thing that's interesting about Bank of America is that they actually increased their lending quite significantly, and most of the others did not. We saw sort of slight declines there in lending activity. So Bank of America seems to be on a slightly different trajectory from some of the other banks and the major US banks and moving in a different direction, which is quite encouraging there.
But Octavio, this is also after a golden 2-year period in banking where, now investment bank is cooling off a bit. What are you expecting for the rest of the year?
Well, yeah, it does seem sort of wrong and almost indecent to say that the banks had a great pandemic, but they did. Basically, the investment banking activity was fantastic during that period. The trading side of things did really, really well, and that has now slowed down. So that fantastic era where the banks are also able to sort of squirrel away enormous amounts of loan reserves, loss reserves, that they were able to draw on over the course of the past year, that has basically evaporated. So those tailwinds now are no longer there. Investment banking activity is way down, except on the mergers and acquisitions side, so there's still a lot of activity there, but new issuance of debt in this higher interest rate environment is going nowhere. Equity issuance is basically almost ground to a halt, so those things aren't pushing. The trading side is still holding up fairly well, but I think it's a fairly dull kind of quarter that we had in the banking sector now, and this is sort of the back to normality, I think. It's not going to be as exciting as it was over the course of the past 2 years. So this is sort of the new normal for banks. We're going to be in this kind of holding pattern, I think, for the foreseeable future. There's no real driving bank earnings forward the way we've seen over the course of the past year and a half or 2 years.
Charlie, what are you expecting in the second quarter, or what are you looking out for?
Yeah, I think I'm really interested in kind of how the American consumer, particularly with these U.S. banks, starts to play in, right? We have a story on Bloomberg today about how credit cards are increasingly important to these banks. We've seen increased credit card activity at J.P. Morgan, where credit cards are so important, but also at Bank of America. And so seeing how that impacts the bottom line, I think will definitely be a factor going into this next quarter. And I should say, Bank of America did project yesterday a 20% increase in net interest income. And so they seem to be really focusing on the consumer as well.
Octavio, when you look at JP Morgan, sure, so overall revenues were down 5%, but you look at Fortress Diamond, they're so far ahead of the rest of the pack. Will they ever lose that kind of crown glory?
Well, they certainly have been able to hold on to that sort of for the past decade almost as long as Jamie Dimon has been running the place. Has done very, very well indeed and has typically beaten earnings forecasts and has had a very, very nice track record. Does it look like now that it's starting to wane a bit? I think they're starting to look a lot more like the other banks. So they do have an advantage there and a head start. But I think there is a bit of a reversion to mean there that we'll see play out over the course of the next year. So I don't expect them to outperform the rest of the sector forever. I think that would be impossible. But I do think it looks a bit like they have stopped defying the laws of gravity and are going to go back to sort of the more of the average bank returns that you see for some of their other sector.
Octavio, if you look at Morgan Stanley, their overall performance was also pretty strong. Can they be one of the leaders of the pack this year?
Well, they had a really good performance on the equities trading side, and fixed income was pretty decent. Deal making there as well was down like everywhere else. So I think they were more a reflection of sort of the average overall. The one to compare them to always is Goldman Sachs. So Morgan Stanley and Goldman Sachs have a fairly similar business mix, and Morgan Stanley clearly outperformed Goldman Sachs quite handily this quarter. But that was due on the back of Goldman Sachs having a fairly weak quarter in terms of its own proprietary investments, its own principal investments. And that's a fairly opaque business unit within Goldman Sachs that has big swings from one quarter to another and had a pretty bad quarter this last quarter. So that made Morgan Stanley look that much better and get a lead upon Goldman Sachs overall. But I don't think that's going to continue. Those investments of Goldman Sachs that did badly this past quarter have always been quite volatile, and I expect those to bounce back in the coming quarters.
Great. Thank you both for joining us. Charlie Wells from Bloomberg and Octavio Morenzi, founder and chief executive of Oppimas. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Most major U.S. airlines have dropped mask mandates after the CDC says a requirement for people to wear masks on planes and public transit is no longer in effect. This comes after a federal judge in Florida struck down the mandate put in place in February 2021. The White House has called the decision disappointing and continues to recommend the use of masks. Now, Ukraine says the battle for the Donbas region in the country's east has begun. In his nightly video address, President Volodymyr Zelensky talked about Russian troops starting an offensive following a long period of preparation. Moscow has not announced the start of any major assault, but its forces were already shelling the area heavily and sending a large number of troops there.
Russian troops begun the battle for the Donbas, for which they have been preparing for a long time. A significant part of the entire Russian army is now concentrated on this offensive. No matter how many Russian troops are driven there, we will fight.
Global news 24 hours a day on air and on Bloomberg QuickTake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Coming up, China's central bank announces measures to help businesses affected by COVID lockdowns. We'll have the full story next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Disruptions from China's new lockdowns, from the impacts yet to be fully felt of the Russia-Ukraine war on food prices, on global supply chains. And if, bad came to worse, could there be another episode of financial contagion? All these are risks on the downside.
Well, that was World Bank Chief Economist Carmen Reinhart speaking to Bloomberg after the institution lowered its estimate for global growth in 2022 to 3.2% from a January prediction of 4.1%. Now, China's central bank has also announced a spate of measures to help an economy which has been hit by lockdowns to control the current COVID outbreak. But the focus on boosting credit likely means the chances for broad-based easing are shrinking. Well, joining us now to talk about all of this is our Chief Asia Economics Correspondent. He is Enda Kerr. Enda, thank you so much, as always, for joining us. So tell us a little bit about some of these measures. What's the ultimate goal here?
Well, there are 23 measures in total, Francine. It's quite sweeping. We're talking really about the central bank getting money into the real economy. So it's through measures to get money to the farming sector, for example, to get money to businesses that have been hurt by the COVID lockdown. So that might be the tourism and hotel industry. They're talking about channeling money into the logistics industry, like truck drivers, for example. So these are fairly micro measures, 23 in total. The biggest kind of sweep of measures on this scale since, in fact, the pandemic began, they rolled out similar measures back in early 2020. But what it does show you is that they're not taking kind of a broad brush, let's cut interest rates type approach that you might think might be the conventional response. They're really going for channels or looking for ways to funnel money into the real economy, into those parts of the economy that need it most. And of course, we know why they are doing that. The lockdowns are causing significant disruption across the board. We saw the consumer data, consumer retail sales data for March, for example. There is pain in consumers, and it's clear now the authorities acknowledge that and they're trying to respond.
So the GDP numbers that came out yesterday and were pretty decent. Why is the government seemingly rolling out so many measures?
Well, you know, on a benign read of those numbers, Francine, you could say, look, that kind of predates a lot of the disruption that started to happen through March and certainly the end of March when COVID really took off around the country. I think there's no doubt, though, the second quarter is going to be a different story. We do have lockdowns underway in places like Shanghai, and even if not, there are ongoing restrictions. I guess the question becomes, how soon can they get the virus under control, and what will that mean for the lockdowns and restrictions? Obviously, if they can get it under control, that would lift pressure off consumers and remove the threat from the manufacturing side of things. But if it doesn't, Francine, and if we do these rolling restrictions, then you're going to see a lot more conversation around how will China meet its growth target of about 5.5%. I think you'll see expectations for much more policy support and ongoing downgrades to growth forecasts.
And what's the situation like in Hong Kong? Do people have enough food, or are the restrictions as bad as certain parts of mainland China?
Well, restrictions are expected to begin gradually easing this week. In fact, Francine, on the ground, for example, schools are going to reopen on a phased basis, and there will be some phased relaxation on restaurants opening for later hours, and I think it's going to be 4 per table and that kind of thing. But really, there's a long way to go in terms of when all of these restrictions are lifted in full, and in particular, there is still ongoing disruption at the in terms of like air transportation, mobility connections to Hong Kong, because quarantine remains in place on the ground, and of course, restrictions on flights.
Thank you so much, Enda Kerr there in Hong Kong. Now, coming up, we'll bring you the latest on Elon Musk's Twitter bid. Plus, will price hikes hit subscriber numbers at Netflix? We're going to talk tech. That's coming up next. And this is Bloomberg.
When you think space, you probably think One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Even more hawkish, St. Louis Fed President James Bullard says he would not rule out a 75 basis point rate hike. Renewed assault, Ukraine President Zelensky says Russian forces have launched a campaign to conquer the Donbass region. Plus, helping out Apollo Global is said to weigh supporting Elon Musk's $43 billion bid for Twitter. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first. So, as always, let's check in on the markets. European stocks are falling. We're seeing a bit of movement on bonds. Now, they're pretty much steady, but a couple of things to watch out for. UK bonds actually extending their drop. If you look at the 5-year yield, climbed to the highest since 2014, and then German bonds also extending some of the slide. The 10-year yield rises 6 basis points to 0.90. Now, it's really travel and leisure stocks leading the decline overall in the European stock 600. Energy sector in the green after crude oil's best run of gains this year, while raw material stocks also rising as copper and other industrial metals are climbing as well. Now, let's also get an update on Elon Musk's offer for Twitter. Bloomberg has learned that Apollo Global is interested in helping finance the $43 billion bid, potentially providing Musk or another bidder with equity or debt to support an offer. Another tech story we're watching today, Netflix reports after the close with the impact of price rises in focus. Well, we're joined by Hendrik Brand, co-founder and partner at Early Bird. Thank you so much for joining us. So many questions I have for you, especially when it comes to Twitter. How does this end? If you look at Twitter, and now we have private equity companies, I mean, is this a political, decision on what free speech is, or is it really about unlocking value?
Oh man, that's difficult to say. I can't look into the head of Elon Musk, but I personally believe it's about economic value he sees and the potential in Twitter for the future. I actually have no guess what his plans are, but I'm impressed by the offer, I must say.
But you think that he'll need to offer more? I mean, as soon as you have, Apollo possibly being interested in others, if you think this can unlock value, does the board have to go? Do you have an interest in Twitter at all?
No, not at all. We're an early stage investor. Twitter is way beyond our scope, and I must say I'm lacking deep insights what the potential might be there. I do not feel qualified to really judge it. Our expertise is a different field. It's Twitter many years ago.
Twitter many years ago. Where is the next Twitter many years ago? So I was going to ask about Tesla, Netflix. Is there anything that you see at the moment that could become the next Netflix?
I mean, we're living in extremely exciting times. If we are looking back a couple of decades, in the 80s and the 90s, we had one platform technology rising per decade. nowadays, I would say we're seeing 5 and more platform technologies coming in 10 years. I mean, if we're just talking about current times, we see the unlocked value in the area of AI. We see in the new cloud computing enterprise open source companies coming around, such as Ivan in Finland and others. We're seeing new space coming, not talking about metaverse and virtual reality. So it is density of new technologies coming is multiple times higher than it was a couple of decades ago. So it's enormous potential coming.
Yeah. So, Hendrik, how do you play the metaverse? I know we're seeing a couple of fashion houses, luxury houses, also a couple of mobile companies getting in fast. Is there a first mover advantage of who's involved in the metaverse?
Definitely. I definitely think so. This is like it was in the early internet times. I think it's a land grab game for the time being, and we see, I mean, starting with entertainment companies, gaming companies, social media companies, in sports, whatever, going into the metaverse, and I'm sure we will see others following. I personally believe the metaverse is definitely the Web 3.0 and will change a lot, if not everything. And almost all commerce activities have to have a certain home in the metaverse in the future. And people will try to secure their space there.
Hendrik, give me a sense of where you see the most value regionally. I don't know whether there's a country that offers the most value. The Bitcoin founder was in Paris lauding their investment opportunities because of access to early stage startups. Is there anywhere else in Europe that looks more attractive?
You mean with respect to the metaverse or with respect to venture capital at large?
In respect to early stage investment, what you do.
Okay, so yeah, I mean, in terms of size of markets, obviously, US, I would say, is still, you know, the dominant market. However, what we have seen in the last couple of years is that Europe has caught up quite a bit, and actually returns have been recently even better than in the US. I think this is due to the fact that the clustering, which has been traditionally around the hotspots of venture capital in Silicon Valley and Boston area, is increasingly moving into the digital space. Is becoming virtual. Nowadays, it's not so important anymore whether you sit in Palo Alto or in I don't know, in Munich or in Stockholm. So, and that has actually unlocked quite a bit of activity and value from remote areas where it's been difficult in the past to really develop global leading companies.
All right, thank you so much, Hendrik Brander, co-founder and partner at Earlyboard. Now let's get back to Alex Webb, who's from our Quick Take team, where he follows tech very closely, to talk more about this Musk bid. So, Alex, thank you for joining us. When you look at Elon Musk, so he's not short of cash at all, but we're now talking about Apollo or someone else coming in. I mean, why does he need them?
So he's rich on paper, but a lot of that wealth is tied up in his Tesla stock, and a lot of the money, capital already has, is committed, and he's taken loans against the Tesla stock already. So if he was to raise more money, he's either got to raise debt against the Tesla stock, or he's got to sell it down. Selling down that stake is clearly not a good signal to Tesla investors. It would suggest that he thinks Twitter is a better allocation of capital than Tesla, which is a big signal. Yeah. So therefore, he has to find the capital somewhere else. And Apollo seems to be, according to reporting from sources, one of the companies that might be willing to do it.
Why does he want Twitter so badly?
I mean, goodness only knows. It seems to be something to do with free speech that is actually, I mean, maybe a very simple way of thinking about it is billionaires quite often buy media assets these days. Twitter is possibly the biggest media asset available out there. Elon Musk is the richest person in the world. Therefore, why the biggest media asset? That might be an answer, but you know, it's hard to get inside his mind.
So, given where the board stands, also we heard Jack Dorsey actually coming out against the board, and where Elon Musk stands. Is this really a fight of Elon Musk versus a board on free speech?
Well, it's on free speech, but also against what is good for shareholders, because Elon Musk was not necessarily coming in for financial reasons. And if he's not coming in for financial reasons and he was going to join the board, that does not mean that he was acting in the best interests necessarily of the other investors. And so Twitter's board has a fiduciary duty to extract the best value it can for its investors. It wasn't clear that Elon, whatever he wants to do with Twitter, was about that. It wasn't necessarily about increasing average revenue per user. It was about these sort of free speech ambitions.
Great, Alex, thanks so much. I mean, the other thing actually we need to look at is Netflix, right? So are prices going to rise because of inflation, or are they fairly immune to inflation?
Well, no, I mean, they can raise prices probably because they can justify it with inflation. It's also raising prices at this stage is what a lot of investors are pointing towards, and saying, well, this is actually the only way they're likely to grow earnings meaningfully in the next few years, particularly in their home market, in the US market. Perhaps as many people are going to have Netflix as they ever will. So it's really about then trying to find other ways to increase earnings fundamentally. And there are a lot of people in the US who go, well, is Netflix discretionary spending? Therefore, as my bills rise because of inflation, maybe that's something I can knock out, particularly if there aren't enough shows that I'm interested in.
Great, Alex, thanks so much. Bloomberg Quick Takes. Alex Webb joining us on Everything Tech. Coming up, Volodymyr Zelensky warns that Moscow is now stepping up its assault in the east of the country. We'll bring you the latest from Ukraine next. This is Bloomberg.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now let's get an update on the situation in Ukraine. President Volodymyr Zelensky has warned Russian forces have stepped up their campaign in the east of the country.
Russian troops begun the battle for the Donbas, for which they have been preparing for a long time. A significant part of the entire Russian army is now concentrated on this offensive. No matter how many Russian troops are driven there, we will fight.
Russia's President Vladimir Putin, meanwhile, has asserted that sanctions on Moscow have failed and are instead causing economic damage in the West.
We can now confidently say that such policy of sanctions towards Russia has failed. The economic blitzkrieg strategy didn't work. Moreover, the initiators themselves couldn't get away with the sanctions. I'm talking about inflation and unemployment growth and economic dynamics worsening in the U.S. and the European countries.
Let's get some analysis from our executive editor for international government, Rosalind Matheson. Ros, I know we want to talk about Mariupol and what happens and what it would mean if Moscow took the city, but actually the bigger question is we're seeing nightmares of these videos coming in of some of the civilian kills. We see the resolve of Vladimir Putin to continue with this bloody war. How does it end?
Well, that's the big question, because does it really need to end for Vladimir Putin? Right now, what's going to stop him from pursuing his military campaign, aside from possibly the complete depletion of his resources on the ground? Certainly, he seems intent on getting some kind of victory in Ukraine, be it a partial one or whatever, and that really seems to be focused on slicing off the eastern part of Ukraine down, including the city of Mariupol, and really embedding his troops there. And once they're entrenched, how do you get them out again? And that will give him a leverage in any peace talks that might come in the future with Ukraine. He basically wants to take that territory and keep it.
So could he stop there? We hear, and we heard, I think, from the president of Ukraine also, him saying to the West that actually a nuclear option is something that Putin would do.
Well, it is the big question. If he does feel like he's getting no traction on the ground, what does he resort to in terms of trying to get a result, especially if he feels he's backed into a corner and under pressure? And of course, his prestige is at stake both at home and abroad in this. And does he resort to other tactics to do that? Of course, even using a tactical nuclear weapon in Ukraine would be in a massive escalation and would really risk drawing in the West. How does NATO and the US stay outside this conflict, essentially, at that point? Does he really want to engage at that point?
Is NATO prepared to act if they had to?
Well, they've not agreed to a no-fly zone over Ukraine. They've been careful about sending in fighter jets. They have moved, though, to be sending in much more of what you think of as offensive weapons, armoured vehicles, tanks, and so on, and really showing that support, shipping as much of it as they can in quickly, especially for the Donbass region. But again, putting troops on the ground from NATO, that's another thing entirely. That's World War III at this point.
Ross, very quickly, we're also seeing two other countries looking at accessing NATO. What kind of game changer is that for Putin?
Well, really, it's just going to feed the narrative in his mind that he's being encircled by NATO, that NATO's expanding and entrenching. He said NATO always promised no more members, and yet they've increased their numbers already since. And now if you have Finland and Sweden joining again, that's going to really feed in his head the idea that he's being encircled. Certainly would suit his narrative at home.
Ross, thank you so much. Rosalind Matheson there, our executive editor for all government coverage. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Garrett. Hi, Leanne.
Hi, Francine. Goldman Sachs' youngest black partner is leaving to start his own fund. 35-year-old Darren Dixon's move adds to a string of exits from the bank's already small pool of top-ranking black executives. Sources tell us Dixon, who was most recently head of Global Capital Solutions, is in talks with backers to start an infrastructure-focused fund. Now, Amazon has agreed to undergo an independent racial equity audit, joining companies such as Citigroup and Tyson Foods in performing such reviews. The audit will analyze whether Amazon's business causes discrimination and will be led by former U.S. Attorney General Loretta Lynch. Amazon says it will publish the results once it's completed. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, the World Bank has cut its 2022 global growth outlook on Russia's invasion of Ukraine and China's COVID lockdowns. The senior vice president and chief economist, Carmen Reinhart, spoke to Bloomberg about the report and what actions the organization could actually take.
Array of disruptions from China's new lockdowns, from the impacts yet to be fully felt of the Russia-Ukraine war on food prices, on global supply chains. And if, bad came to worse, could there be another episode of financial contagion? All these are risks on the downside. But, will it be cut again? It's, certainly wouldn't rule it out, but the point I'm making is we are living a period of exceptional uncertainty.
So what can that $170 billion package that David Malpass, the president of the World Bank, with whom you work so closely, what are you going to do with that money? Can it arrest any of these forces? Where do you start? Do you start giving the money to Ukraine? Do you feed it into some of these countries, for example, who are facing genuine food crises, where this concern about unrest is growing?
Absolutely. Look, Food crises, you know, you can go back to the French Revolution, right? The price of bread. Food prices have been on the rise. We are not important. We are not on the crisis mode a la 2008. Not yet. Maybe we won't be, we hope. But how does the World Bank provide support? Big support for social safety nets. When food prices rise, very often governments panic, put on price controls. Price controls are very costly and also not very effective. A much better mechanism to help those impacted, those households, is through social safety nets. That's a big emphasis of what the bank does too.
Carmen, you've said that we're not in crisis mode yet, and yet you look at economies like Sri Lanka, like Pakistan, it does feel like if they're not in crisis mode, they're certainly very close. Right, but there is a sense that the price pressures are creating political pressures and they're feeding into each other, into a lot of these economies. How worried are you from that aspect of being able to rein this under control, and what the World Bank can actually do to help?
It is very troubling. Look, the bad times breed discontent with governments. They also breed all kinds of civil unrest. If you look at, for example, the indices published by Freedom House, what you see is in the last few years, especially accelerating in the last couple of years, decline in democratic values. So the idea that, especially as you know, the low-income countries that are disproportionately, and middle-income countries are also disproportionately affected by higher food prices, continued slow growth, and governments that are overspent and can't do much about it. Social unrest is something to be concerned about.
Well, that was the World Bank Senior Vice President, Chief Economist Carmen Reinhart. Coming up, masks off. The 5 biggest U.S. airlines drop compulsory face coverings on flights after a federal court ruling. We'll bring you that story next. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now let's check in on the markets. If you look at European stocks, they're declining. Bond yields actually climbing. Markets reopening after a holiday amid some of these hawkish comments by Federal Reserve officials. Well, I'm thinking of James Bullard and Russia's renewed campaign in eastern Ukraine. If you look at energy stocks, they're led higher by TotalEnergies on a positive first quarter report. Raw material sector, though, in the green as well. We saw gains for copper, gains for other industrial metals, pushing the Bloomberg Commodity Spot Index to a record. A couple of other things we need to watch out for: European bonds actually falling. I don't know whether we have that. There you go, the 10-year German bond. Always good to check in on this, because if you look at German and UK 10-year yields at the highest since 2015, and all of this is on the back of the St. Louis Fed President James Bullard saying that rate increases of 75 basis points, while not the base case, should not be ruled out, as the central bank needs to move quickly to combat inflation. Of course, he's also King Hawk. Now, the 5 biggest U.S. airlines have dropped compulsory face coverings after a federal court ruling. The decisions come just hours after a U.S. judge overturned a federal mandate for passengers to cover their faces on flights. The industry had been lobbying the White House to ease the rules. Let's speak to our reporter who looks at transport, Siddharth Philip. Sid, what have the U.S. carriers done exactly, and will it deter or encourage people from flying?
So the U.S. carriers, especially the 5 largest carriers, American Airlines, Alaska, Delta, Southwest, and United, have said that they've dropped their mandates for masks on planes effectively from immediately, essentially. And the use of masks will still be optional for passengers as well as staff. But for the most part, passengers will not be forced to wear masks anymore on planes with immediate effect.
So, Sid, why have masks been so contentious for the airlines?
So masks have actually been a very sort of big flashpoint for the airlines as they've got back from the pandemic where nobody was flying. And the U.S. has been one of the fastest markets to recover from the pandemic, and that's mainly been driven by domestic flying. And in the U.S., we've seen multiple instances of people sort of holding up planes and marshals having to get people off planes, as well as sort of air rage incidents because of people not wearing masks. So this might actually resolve those issues that have been sort of circling, but it does add some sort of worries for people who may not be fully sort of comfortable with traveling without masks.
Yeah, it'll be interesting to see whether, it means there's a pickup actually in bookings or a decline in bookings. Sid, as always, thank you so much for joining us. He's, of course, our reporter looking at transport and airlines, Sid Philip. Bloomberg Surveillance, early edition, continues in the next hour. Matt Miller and Kay Lyons in New York, or Anna Edwards here in London. A reminder, stocks in Europe declining, markets reopening after the holiday, after these hawkish comments by Federal Reserve officials. Also, markets looking at what China said, lending rates definitely the spotlight as the PBOC pledged more support. This is Bloomberg.
estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Clearly, the issue that's top of mind for most investors is inflation.
I do think it would behoove the Fed to get a move on.
We don't really know how aggressive the Federal Reserve is going to be in terms of tightening monetary policy.
A lot of people are hoping for them to be, to pull back a little bit early. Hope isn't a great strategy, and I really worry that this is going to cause some problems for the market.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Tuesday, April 19th. Our top stories today. St. Louis Fed President James Bullard says the central bank shouldn't rule out rate hikes of 75 basis points. Bullard is urging the Fed to move more quickly to raise interest rates to around 3.5% this year. Ukraine says Russia has launched a new offensive in the eastern part of the country aimed at conquering the Donbass region. And most major U.S. airlines won't require passengers or employees to wear masks on flights. That's after a U.S. district judge overturned the federal mask mandate. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Europe back in play then after a very long, very extended weekend. And Kaylee, European equity markets just in the last 15 minutes or so taking another leg downwards as we continue to focus on higher yields.
Yeah, and you saw that downward action in Asia as well, as a lot of those markets opened up from a holiday. It was a broadly down day in Asia, but it was really the drag from China and Hong Kong that created it. In China, the CSI 300 off about 0.75% on the day, even after 23 measures unveiled by the PBOC to support the Chinese economy, even in the midst of COVID lockdowns. Clearly, those measures failing to impress investors, a question of whether they go far enough. You also had technology stocks under some serious pressure. The Hang Seng Tech Index down the better part of 4%. A lot of concern there as well about regulation and the potential delisting of shares in the United States. In the bond market, Anna was alluding to the selling pressure we are seeing in bonds globally, and that was definitely true in Australia. The 10-year yield was up the better part of 10 basis points, actually touched the highest going back to 2015, 3.065% where we trade at the moment. But of course, you got the minutes out of the RBA for the April meeting, indicating that inflation is going to mean an earlier timing of the first rate hike since 2010. So that definitely showing up in the bond market. One central bank, though, that is nowhere close to hiking rates would be the Bank of Japan. And it is especially the divergence between the BOJ and the Federal Reserve that is leading to continued weakness of the Japanese yen. Weaker for a record 13th day in a row, down about 1% against the U.S. dollar today. We are north of 128 for the first time since May of 2002, Matt. That is a 2-decade low.
Yeah, time to go on holiday in Tokyo. Think about all the stuff you could buy there.
there with dollars. By the way, for a second, I thought you were showing the U.S. 10-year yield at 3% and change, which isn't really that far off from what we're looking at here in treasuries. You were showing, of course, Australia, but we're at 289.16, so we're getting closer and closer. S&P futures not doing much today, and the S&P cash trade did nothing yesterday, finished the day unchanged. So looking for some direction, maybe Jim Bullard's 75 basis point rate hike to 3.5% this year would be enough to move markets as we get closer to the open. NYMEX crude down 1.5% to 106.64, so down, but from a really high level. And Bitcoin also not moving much, 40,739. We need some direction in these markets in the next few hours, Anna, before we end up looking like we did yesterday. Maybe Europe can give it to us.
Well, the European equity markets are moving in a downward direction. We have stocks certainly on the CAC 40 and the Xetra DAX down 0.9%, nearly 1% lower on the French market. The UK market a little better supported. Matt was mentioning there we have a slightly weaker oil price, but at elevated levels, and we see energy stocks still moving higher here in the European session. Basic resource stocks also moving higher on the back of higher commodity prices, copper prices in particular, and others. Let me show you elsewhere what's happening in markets, because we have focused on what's going on in the bond markets as a key driver of reduced risk appetite here in Europe. And that does seem to be part of the narrative today. So we've got Jim Bullard talking about 75 basis points, and that is having a global impact, and certainly a continuation of a theme we've seen for many weeks now, of course. We have yields here in Europe, we have bond markets here in Europe that are really responding to that. And we see yields on the German 10-year, the German Bund, and the UK gilt at their highest since 2015. So just in common with what Kaylee was talking about there in Australia. And remember when this was negative? Now not negative anymore, 92 basis points on the German Bund. This is natural gas prices here in Europe, down by 3.8%, and actually the lowest we've seen on natural gas since the invasion of Ukraine. And part of this is weather related, but also some of the narrative coming out of the Kremlin saying there is still time to pay in rubles, maybe next month, even though the Europeans have shown no interest in doing so. CD Projekt, this is a games company, a gaming designer based in Poland. Their numbers out late on Thursday, disappointing the markets in terms of comparison with the previous year. The previous year was elevated, of course, by the release of the Cyberpunk game, which turned out to be glitchy. They had to disappoint with some other games news as well. Stellantis, the car maker, down by 5%. They've said they're going to shut their factory just outside Moscow. Talking of Russia, let us show you where we are on Russian assets. President Putin is going to be meeting with large Russian businesses on Wednesday. We see the stock market in Russia down by 2%. The ruble, of course, back to levels we saw pre-invasion. We spoke to a guest last week, though, who told us this is an entirely broken market, very much supported by capital controls that President Putin had to put in place. He says that this is showing that the country is withstanding what he called the economic blitzkrieg of sanctions. The international community, though, could ramp up those sanctions. We've seen pressure by Italy and France to take it further when it comes to oil. So we'll continue to watch that, Kaylee.
Absolutely. And as for what else we are watching today, Anna, there is a lot going on, including G20 finance ministers and central bankers meeting in Washington for the gatherings of the IMF and the World Bank. You also have the BNEF summit kicking off here in New York. Speakers include Ali Zaidi, the Deputy National Climate Advisor at the White House, as well as Mark Carney, the UN Special Envoy for Climate Action and Finance. And finally, earnings coming up after the close. Netflix will be reporting post-market.
All right, now St. Louis Fed President James Bullard says the central bank needs to move quickly to raise rates to around 3.5% this year during a virtual event hosted by the Council on Foreign Relations. Bullard said a 75 basis point hike could be an option at once if needed.
Cycle, there was a 75 basis point increase at one point. So I wouldn't rule it out, but it's not my base case here.
Let's get more with Danny Berger. So, Danny, a lot of people are waking up, seeing this, maybe a little bit shocked. How are markets reacting?
Well, look, we're certainly seeing it in the bond market. You and Kaylee were both pointing out the selling going with bonds, yields pushing higher, with Bullard saying that they want to get to neutral expeditiously, that being sort of the word of the day, apparently, that all the central bankers are using. As soon as the third quarter, all of this is about trying to put downward pressure on inflation. Inflation becoming enemy number one. But really interesting in terms of the market action, Ben Amons over at Global Medley Advisors pointing out that James Bullard, it's really an easy call for him to say maybe we'll go 75 basis points because the market reacts. And that market reaction is doing part of the job of the Fed to tighten financial conditions. And to that point, we have seen just this bloodbath in bonds. The bond rout just continues. For our radio listening audience, I'm looking at a chart of ETFs, specifically the 20-plus year bond ETF from BlackRock. That is falling 20% from its peak, surpassing the crisis, surpassing all other sell downs. So look, it is a lot of drawdown we're seeing in bonds, but kind of an interesting thing to this picture to mention is this ETF has actually gotten inflows, about 2.5 billion so far this year. So yes, the market pricing it in, but it's clear some think that perhaps it's gone too far.
Okay, so a big focus on that then, Danny. Also a focus on what China is doing to support its economy. There was perhaps some disappointment in some quarters that, yes, we got a triple R cut from the Chinese, but we didn't get an interest rate cut. There is talk of support to come, though.
Yeah, exactly. China, the opposite story of the Fed. Really interesting to see these rate differentials, whether it be the yen, of course, that's a different story as well, at the weakest in 20 years, or yes, China. So China's saying that they're announcing 23 measures to help the local economy. The important thing here is it's very targeted measures. It's things like promoting lending among small businesses, promoting lending for local governments. It stops short of a triple R cut or an interest rate cut. Is that next? Well, according to Goldman Sachs, the unveiling of this broad package means that it's less likely we're going to get moves, again, things like a triple R cut, Matt.
All right, Danny, thanks very much. Bloomberg's Danny Berger looking at a couple of big market-moving issues for us, the Fed and China. Now let's get to the war. Russia's military shelled southern and eastern Ukraine overnight. Ukrainian President Vladimir Zelensky spoke about Moscow's new campaign.
Russian troops begun the battle for the Donbass, for which they have been preparing for a long time. A significant part of the entire Russian army is now concentrated on this offensive. No matter how many Russian troops are driven there, we will fight.
Rosalind Matheson is Bloomberg's international government executive editor. She joins us now to tell us, what this means for the war and the possibility of peace. Does this just mean talks are done?
Well, it doesn't mean that talks are done. In fact, it might be an effort by Russia to gain some leverage going into potential talks because, of course, if their troops are truly entrenched in the eastern part of the country and they've essentially carved off part of Ukraine, then they can go into those talks and say, well, we now want that territory for good, and it's very hard to get them out again. So it could prove to be a leverage point in future negotiations. Of course, the Russian president won't even engage in those conversations unless he's pretty much guaranteed something to come out the other side, because he can't risk what it would look like if he failed to do so. Equally, Ukraine says they're not going to cede any territory, but at some point you can see perhaps we might move back toward a conversation, at least at the foreign minister level, but Russia seems not keen for that to happen until it can make some gains on the ground in those eastern areas.
Good morning to you, Ross. So the focus on the ground is on Donbass now, on the Donbass region. What about the sanctions response then? Because here in Europe, we're hearing voices certainly from France and to some extent from Italy talking about the possibility of an oil embargo on Russia. We've seen that in the US already. Is Europe still divided on this, though?
Well, still pretty much, although you can imagine that the oil conversation will escalate in the next couple of weeks. Pressure from France and Italy, as you say, particularly once we get through the French election this weekend, for the EU to move more formally towards a conversation on an oil embargo. Of course, the big one that's still off the table is gas, and that's where Germany, of course, says that the economic shock to it and others is too great to go to a full embargo anytime soon.
All right, Bloomberg's Rosalind Matheson, thank you so much. Now let's talk about the U.S. response as well. It wants to reestablish a diplomatic presence in Ukraine as soon as possible. That's according to State Department spokesman Ned Price, who spoke in Washington. But he didn't say when that could happen, citing the safety of American diplomats as a priority. Bloomberg Washington correspondent Joe Matthew joins us now for more. So, Joe, what else do we know about the U.S.'s latest moves in this war?
Well, you're asking the right questions. It's in terms of when and where exactly. Ned Price said as soon as the security situation allows it, not a second later. The EU has reestablished its mission in Kyiv. Spain is set to follow. The French have suggested similar plans here. But of course, even as recently as last week, the White House was talking about considering sending a U.S. official or a cadre of officials to the area as kind of a show of solidarity and unity with the Ukrainian government. The question in terms of where, it might not be in Kyiv once this decision is made because of the continued Russian attacks, but Lviv, which would have been the obvious other city to set up shop here, was also targeted by missiles this week by Russia. So there are a lot of concerns about where and when. It could take some time to figure this out.
Joe, on the domestic front, most major U.S. airlines no longer requiring travelers or employees to wear masks on domestic flights and on some international flights as well, after a federal judge overturned a mandate for passengers to cover their faces on flights. I mean, for me, what a relief. Having to wear a mask on an entire international flight, I just found to be truly annoying. But for the administration, they think this is wrong.
Yeah, Jen Psaki, the White House press secretary, called it a disappointing decision in the White House briefing yesterday. That ruling had been made shortly before she hit the podium here. The CDC hadn't even weighed in yet. She said the Justice Department, DOJ, will be investigating this, reviewing the decision to see if there's going to be a legal answer. But of course, Matt, you know, this follows the Supreme Court weighing in on and striking down, in fact, the president's workplace mask or vax mandate. The reaction from airlines has been swift. CDC last night said it's officially done. The mandate is over. One thing, interestingly, flight attendants are asking for is just clarity, the confusion here that could make this a lot more difficult to enforce. Let us know, masks, yes or no, and we'll follow. Some folks were cheering on planes last night, Matt. Others were boarding planes with masks on, so you're going to still see a mix of both.
A lot of confusion for sure. Thank you so much to Bloomberg's Joe Matthew in Washington for us. And of course, you can listen to Joe every weekday on his radio program Sound On at 5 p.m. Eastern on Bloomberg Radio. Now let's turn to some company stories we are watching this morning. Apollo Global is interested in helping finance a bid for Twitter. Bloomberg's learned that the firm could provide Elon Musk or another bidder with equity or debt to support an offer. Of course, that other bidder potentially could be a private equity firm like Thoma Bravo. Interestingly, after a 7.5% gain yesterday, Twitter is lower in pre-market trading this morning, down about 1%. Another stock that is moving lower as well, and Anna was mentioning how it was trading in Europe, Stellantis down about 4.4% in pre-market trading here in the U.S. after shuttering production of that factory in Moscow. But one stock moving up today is Zendesk. This is a software company, and reportedly overnight it has hired an advisor to help with a potential sale. So that is lifting the shares in early hours this morning, up about 5.5% before the bell, Anna.
Coming up on this program, then, Joost Beaumont joins us, senior fixed income analyst at ABN AMRO. And if it is higher yields taking the edge off risk assets today, that is certainly an interesting conversation to be having. And with those comments around 75 basis points from Jim Bullard. And the king of the lunatics, how Bitcoin's most watched whale is using the cryptocurrency as a backstop for his stablecoin. Read more, make sense of those of that headline on today's Big Take story by typing NI Big Take into your Bloomberg Terminal Plus. Tune in to Bloomberg Crypto today at 1 p.m. New York time, 6 p.m. in London. Today, Matt and Kaylee will be speaking to FTX CEO Sam Bankman-Fried and Hut 8 Mining CEO Hein Levinson. That conversation coming up later. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
earnings season is here.
It's been a particularly difficult quarter.
What is the forward outlook for companies?
Bloomberg is fastest with the numbers and analysis.
Where is the value here?
There are opportunities out there.
Bloomberg, the fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance, the early edition. We are simulcast on both radio and television. I'm Matt Miller here in New York with Kaylee Lyons, Anna Edwards with us out of London. I'm looking at consumer discretionary stocks because we're going to get so many reporting this week, from Hasbro to Las Vegas Sands to Tesla, really running the gamut. Netflix as well, but they're not in the S&P 500 consumer discretionary sector, which is right now trading at about 25 times earnings, a little bit more than that, even though real wages have fallen so substantially with the rise of inflation. So consumers may have to pick and choose between which discretionary products they're willing to spend their monthly budget on. Joining us now is Christine Aquino, Bloomberg Markets team leader, to talk about this. Do we expect, Christine, some of these valuations to come down?
Well, Matt, that certainly is the expectation, and this chart is precisely why there's so much fear about the potential recession that could come as a result of inflation and the Fed's response to it. It's precisely why people are afraid of it, because of the fact that inflation is very, very much real for consumers, and it's something that they're going to have to contend with. It's something that they're going to have to make decisions on. As you say, they're going to have to decide between Netflix and heating or whatever it is. And so when it comes to how companies are going to be taking that, I think it's going to be very interesting how they navigate this earnings season, because of that awareness of the hit to consumers and the fact that there are some companies still, as you say, Matt, very, very high valuations that could be quite vulnerable, especially if this consumer deterioration story really plays out over the next couple of quarters.
Yeah, even if we took positive messages from the credit card businesses and some of the big banks in the United States, Christine, the point around consumers is well made. Let me ask you about differences or differentials in interest rates globally, because that is something that's really moving FX markets. I'm thinking, of course, about the yen. We've seen real weakness coming through in the yen, partly because of a difference between the BOJ and the Fed. How does this keep playing out for us?
Well, Anna, it's going to be very exciting to watch for sure. In a lot of ways, Japan, both in terms of the currency and monetary policy, is at the final frontier of this shift to a more hawkish regime for a lot of central banks all over the world. The BOJ has, for a large part, resisted that sea change, but I think now is the time that they may have to do a little bit more to respond to that, and that's why we're seeing the yen really ramping up in terms of its weakness. And it's going to be interesting, because I think we're in this dynamic where markets are really pushing the central bank. This is something that we saw in the ECB, the Fed here in Europe, but this is something that markets like to do. They like to push central banks to get them to do something a little bit more than what they may be willing to, and in this case, sound a bit more hawkish and actually do something to indicate the hawkishness.
Christine, thank you very much. Bloomberg's Christine Aquino with the latest on the markets. And for more market analysis, check out MLI Vigo. That is the function on the Bloomberg terminal where you will find the Markets Live team and their blog. This is Bloomberg.
When you think space, you probably think One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. It's a fresh blow to Russia's billionaires. President Vladimir Putin has dropped the curtain on the era of foreign stock listings. Putin has signed off on legal amendments that require Russian companies to delist their overseas shares. That could force tycoons to reconfigure the structure of businesses they hold via overseas shares, paying foreign currency dividends. U.S. Treasury Secretary Janet Yellen will participate in some sessions of the Group of 20 this week. The U.S. is backing off any suggestion that its officials would boycott G20 meetings if Russia takes part. Yellen will avoid some meetings of the G20's finance ministers in Washington, but she will attend others focused on the economic fallout from Russia's invasion of Ukraine. And in Shanghai, authorities reported 7 more deaths from the coronavirus. China's financial hub is grappling with a record outbreak that's brought unprecedented disruptions to residents and threatens the country's economic growth. The 25 million people living in Shanghai have been locked down for weeks. And it raises the question, Anna, of the response of policymakers. As evident today, investors not yet impressed with what China has promised to do.
Yeah, absolutely. We've heard from policymakers about some measures being taken, and most recently the PBOC rolling out measures to revive the COVID-hit economy, apparently, but maybe not as much as some had anticipated. Coming up, Joost Beaumont joins us, senior fixed income analyst at ABN AMRO. 75 basis points, talk of that in one meeting at the Fed. What does he make of that? This is Bloomberg.
that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. St. Louis Fed President James Bullard says the central bank shouldn't rule out rate increases of 75 basis points to fight inflation. In a presentation to the Council on Foreign Relations, Bullard said the Fed needs to move quickly to raise rates to around 3.5% this year. Ukraine says Russia has launched a full-scale offensive to take control of the Donbass area in the eastern part of the country. Russia has made the capture of the Donbass its main goal in the war, now that it's failed to capture the Ukrainian capital, Kyiv. And most major U.S. airlines are no longer requiring travelers or employees to wear masks on domestic and some international flights. That came hours after a federal judge overturned a government mandate for passengers to cover their faces. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And European equity markets under pressure, showing some direction, Matt. How do U.S. markets look this morning?
Well, we're seeing a little bit more direction than we were about a half hour ago. Of course, the comments from Jim Bullard about the possibility of one single 75 basis point rate hike or getting to 350 by the end of the year could move markets a little bit. The S&P 500 futures are now down about 1/3% to 43.73. 10-year yield also moving up a little bit right now at 289.74. So we're still 10 points away. Well, we're only 10 points away, I should say, from a solid 3. And NYMEX crude coming off 1 2/3% right now at 106.43. Bitcoin had shown a little bit of positive momentum. Now it's off a little bit, hovering around the $40,000 level at 40,622. I should point out, we have Sam Bankman-Fried on the crypto show today, so I'm pretty excited about that at 1 p.m. this afternoon. Kaylee, what are you looking at?
Yeah, really exciting for the conversation you and I are going to have later on today, Matt. Definitely looking forward to that. As for what's going on in pre-market trading here in the U.S., one story we continue to monitor is the saga with Twitter. And the latest entrant to this ongoing narrative is Apollo, potentially looking at backing either Elon Musk or potentially another bidder like private equity firm Thoma Bravo for Twitter. Interesting, though, after a 7.5% gain yesterday, Twitter is lower in early hours this morning by about 1.5%. Also lower ahead of its earnings, Netflix is down about 0.6%. It will be reporting after the bell, and as usual, all the focus really will be on subscribers as well as the impact of pulling out of the Russian market. And then, as Anna mentioned, you do no longer have masks on U.S. airlines. Most of the major carriers now removing that mandate after that court ruling yesterday. You were seeing a small lift to airline stocks in early hours, but they have given back some of those gains as we've seen futures rolling over, as Matt was describing. United is up about 0.4%, and American, while it was higher earlier, now essentially flat before the bell, Anna.
Gets very complicated with these mask rules. If you're flying internationally, I can certainly vouch for that. Let's have a look at where we are on these European equity markets then. And in terms of direction for US markets, things looking increasingly negative here for European stocks. So the Stock 600 down by 1.4%. The focus on higher treasury yields. The focus also on higher gilt yields and bond yields here in Europe. That's a conversation we'll pick up on shortly. Natural gas prices down to 2.3%, actually at their weakest level since the invasion of Ukraine. Part of that is the weather. Also some of the language coming out of the Kremlin recently about there still being time to pay in rubles for Russian gas. Not that the Europeans want to do that, of course. CD Projekt down by 8.4%, disappointing the market, it would seem, after hours on Thursday, and this is the first time that European equity markets have been open since then. In response to those numbers, the stock is considerably weaker. And Stellantis, the car maker, down by 5.7% as it decides to close a factory just outside Moscow. It cites sanctions and also logistical issues. Talking of Moscow, talking of Russian assets, stocks down by 2%. Movement on the ruble once again. We've seen the ruble bounce, coming back really to levels pre the invasion. President Putin saying that this is a sign that the Russian economy has withstood the pressure of sanctions. Of course, those sanctions could increase. And we talked to one guest last week who said this is an entirely broken market because of the extent of capital controls that we are witnessing here. Interesting to see Russian companies trying to change the way that some of the parts of the payment of their coupons, how that process takes place and what parts of it take place abroad versus onshore. We'll watch that with interest to see whether that changes the story with regards to Russian debt at all. Matt.
All right, Anna, thanks very much for that. Let's get to Joost Beaumont right now. He is a senior fixed income strategist over at ABN AMRO. And Joost, you know, it's interesting. We hear from Jim Bullard that it's not his base case, but he suggests there's a possibility of a 75 basis point hike in one go. He wants the Fed to get up to 350 this year. How much of a divergence is there between ECB policy and what we hear out of the Fed?
Well, there's a huge discrepancy between both central banks. I think the remarks of Bullard clearly show the position that the Fed is in. It really needs to fight inflation against the backdrop of an economy still doing relatively well, and also the labor market being particularly tight and wage growth picking up sharply. So there's a clear risk in the US of a wage price spiral, and that makes the Fed, of course, extremely worried. And that is mirrored by the remarks we heard today. On the other hand, we have the ECB, which is in a bit of a more difficult position. Of course, inflation is also rising sharply here, but on the other hand, there's still a lot of spare capacity in the economies. And yeah, the economic outlook is also a bit darker, and yes. For most also on the labor market, we don't see wage growth really picking up. So bottom line is in Europe, basically the rise in inflation is mainly driven by energy prices and less so from demand-driven factors.
Okay, so that's the difference. Joost, good morning to you. When we hear James Bullard talk about 75 basis points, does he really mean that the Fed might do 75 basis points in one meeting, or is he just trying to position the markets to not be surprised at 50?
Maybe both. Of course, it's his personal opinion, and he might be a bit hawkish. I think it clearly shows the path the Fed is on, and that it clearly needs and wants to raise interest rates quickly in order to fight this inflation. So indeed, markets need to prepare maybe for a quicker pace of rate hikes. And what might be interesting is that, of course, the quicker rates go up, the worse there will be for equity valuations of companies, and that will also trickle through to the fixed income markets with spread widening. And we haven't seen that happening so far.
Yeah, 75 basis points certainly would be quick, Joost, but of course, Jim Bullard also saying that isn't his base case at the moment. Contrast this with the ECB. I know that you think September is really realistically the earliest they could hike. In what increment? How many basis points do you think is realistic for Christine Lagarde and co?
Yeah, here the discussions are also increasing about the extent of what the rate hike will be. Will it be 10 basis points or will it be in steps of 25 basis points? So in that respect, it's still much less than what the Fed is thinking about. Yeah, we think that September is indeed the earliest month that rates will go up. In June, the ECB will publish its new projections and also will tell us when QE will end. That is likely to be in the third quarter. Of course, if you announce that in June, it's likely that you will announce that it will end in July. And yeah, then at the same time, raising rates will be a bit odd for the ECB. So September, clearly the first date in practical terms. And then it depends, of course, where the economy is, where the outlook for inflation is, what it will do.
Joost, quick hypothetical here. If European leaders decide it's no longer morally tenable to continue sending money to Moscow for oil and gas, what happens then to fixed income?
Well, I think for the fixed income market, it's not only this. There are a lot of dark clouds hanging above the market. Of course, the war is ongoing. Issues with Russia. We have the global monetary tightening, which might go quicker than anticipated at the moment. We have high inflation, of course, eroding household purchasing power, also hitting profit margins of companies. So basically, we are a bit in a perfect storm for market correction. And if you look at the rates market, rates have gone up, anticipating the monetary tightening. But if you look in the credit markets, actually, if you look at spreads, they widened after the start of the war, but have come down to levels below these ever since. So there is a quite benign view of credit markets that where the economy will go. And in our view, we think the rates market is in this respect right. So we might be set for quite some volatility and also wider spreads going forward.
Joost, thank you very much for your time. Joost Beaumont, ABN AMRO Senior Fixed Income Strategist, with us this morning. Ukraine says Russia has launched a new offensive in the eastern part of the country aimed at conquering the Donbass region. We will get the latest as to what is happening on the ground in Ukraine next. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
We can now confidently say that such policy of sanctions towards Russia has failed.
The economic blitzkrieg strategy didn't work. Moreover, the initiators themselves couldn't get away with the sanctions. I'm talking about inflation and unemployment growth and economic dynamics worsening in the U.S. and the European countries.
That was the Russian President Vladimir Putin speaking in a televised video link with officials yesterday. He says that sanctions have failed. There could still be more to come. Mark Champion, Bloomberg senior reporter for international affairs, joins us now. The sanctions response is part of what Europe and the United States is doing here, of course, Mark. Let's focus for a moment on what's happening on the ground, though. The Ukrainian President, Volodymyr Zelensky, says that Russia wants to capture the Donbass region, and that does seem to be the focus of attention right now.
Yes, and he says that a build-up that's been going on for a couple of weeks now has now kind of reached a critical point, and that the Russians have begun their offensive. The Americans are a little bit more cautious about what's happened, but it does look like effectively the Russians have begun a major artillery offensive to kind of soften the ground, at least, even if they haven't started to move in any sort of major attempt. But I think Zelensky is probably right that the offensive has effectively begun. And that was probably a little earlier than most people thought, because the expectation was that they would wait until they could release the troops from around Mariupol, where they got about an estimated 12 battle groups which are tied up down there. But it seems that it has begun now.
Well, so just give us an update on Mariupol. I thought they had basically flattened the city by now. And does Putin want to be out by May 9th? Is that just sort of a silly idea, or is that realistic that he wants to be done by then?
Well, I mean, so first of all, on Mariupol, there is a very large steel factory there, and that is still held by a number of troops. We don't know exactly how many, but a significant number of troops are in the steel factory. A couple of times, the Russians or their allies, the separatist Donetsk People's Republic forces, have said that they are storming or have stormed the factory, but so far it still hasn't been taken. So that is still tying troops down, although you're right that the rest of the city has fallen. And then as to May the 9th, yes, I mean, it's clear that Putin that's an event for Putin. So he will want to be able to say, something that is inspiring for Russians about this war. Now, what that in fact entails, it's nobody really knows except Putin, but it seems rather unlikely that he's hoping to have the war finished by May the 9th. It may, in fact, even be the opposite, where he uses it as an occasion to announce a mobilization in order to continue the war further. So we really don't know what the significance of that event will be, except that it is a major calendar event for Russia. It marks their victory over Nazi Germany in World War II, and given all of the propaganda about Ukraine being a fascist state, and that's the reason for the invasion, it will be important.
Absolutely. Well, time will tell, and that date is ticking ever closer. Thank you so much to Bloomberg's Mark Champion. Meanwhile, the World Bank has cut its 2022 global growth outlook on Russia's invasion of Ukraine. Chief economist Carmen Reinhart spoke to Bloomberg about the report and what actions the World Bank could take.
Array of disruptions, from China's new lockdowns, from the impacts yet to be fully felt of the Russia-Ukraine war on food prices, on global supply chains. And if, bad came to worse, could there be another episode of financial contagion? All these are risks on the downside. But, will it be cut again? It's, certainly wouldn't rule it out, but the point I'm making is we are living a period of exceptional uncertainty.
So what can that $170 billion package that David Malpass, the president of the World Bank, with whom you work so closely, what are you going to do with that money? Can it arrest any of these forces? Where do you start? Do you start giving the money to Ukraine? Do you feed it into some of these countries, for example, who are facing genuine food crises, where there's concern about unrest is growing.
Absolutely. Look, food crises, you know, you can go back to the French Revolution, right? The price of bread. Food prices have been on the rise. We are not important. We are not on the crisis mode a la 2008. Not yet. Maybe we won't be, we hope. But how does the World Bank provide support? Big support for social safety nets. When food prices rise, very often governments panic, put on price controls. Price controls are very costly and also not very effective. A much better mechanism to help those impacted, those households, is through social safety nets. That's a big emphasis of what the bank does too.
Carmen, you've said that we're not in crisis mode yet, and yet you look at economies like Sri Lanka, like Pakistan, it does feel like if they're not in crisis mode, they're certainly very close. Right, but there is a sense that the price pressures are creating political pressures and they're feeding into each other, into a lot of these economies. How worried are you from that aspect of being able to rein this under control and what the World Bank can actually do to help?
It is very troubling. Look, the bad times breed discontent with governments. They also breed all kinds of civil unrest. If you look at, for example, the indices published by Freedom House, what you see is in the last few years, especially accelerating in the last couple of years, decline in democratic values. So the idea that, especially as you know, the low-income countries that are disproportionately, and middle-income countries are also disproportionately affected by higher food prices, continued slow growth, and governments that are overspent and can't do much about it. Social unrest is something to be concerned about.
World Bank Chief Economist Carmen Reinhart there speaking to Bloomberg's Kathleen Hayes. We do have some breaking news we wanted to bring you from Uber. Here in the U.S., both riders and drivers are no longer required to wear masks here in the United States as of today, April 19th, 2022. Of course, that follows the ruling yesterday that overturned the mask mandate on transportation here in the U.S. We've seen a lot of airlines making this move, now Uber as well. Again, riders and drivers no longer required to wear masks in cars. Uber shares are relatively unchanged in pre-market trading. From New York and London, this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, the early edition. I'm Matt Miller with Kaylee Lyons in New York, Anna Edwards with us out of London. Tom Keene, co-anchor of Bloomberg Surveillance, the original, joins us now. Tom, what's your single best chart of the day?
It ought to be the yen. The yen's really historic here. We're moving down to massive depreciation over 20 years in the yen. Forget about that. Let's look at corn. And corn needs to be adjusted for inflation. This is real corn set in today's $2,022. And the important point at $8 a bushel, and only Matt Miller in the building in New York understands what an honest bushel is as an Ohio boy. The answer is we're almost up to $10 a bushel, which is the inflation adjusted level is seen by those yellow lines. We've had two massive bouts of corn deflation, a free lunch, if you will, and the answer is corn fritters are getting expensive.
Of course, you don't have to go far to link the cost of food, Tom, with some of the geopolitics that's playing out, certainly for some of the other soft commodities. I know that the geopolitics will be front and center for you as you talk to Robert Blackwell.
Well, we're going to talk to Robert Blackwell, the Council on Foreign Relations, the ambassador with his immense experiment, particularly of South Asia, or Southern Asia, I should say. But also, we should note the World Economic Outlook comes out after our conversations in Washington last week. And to Matt's point on food, it's going to be extraordinary to see the appendices of the outlook and how they deal with this true food crisis. Some interesting guests today. David Rubenstein will darken the door later.
Yeah, really looking forward to that interview, Tom. Thank you so much, Tom Keene, co-anchor of Bloomberg Surveillance, for joining us. Now, other than watching that David Rubenstein interview, what else are we watching today? I will be watching Netflix, literally, and when it comes to earnings after the bell. 2.5 million subscribers expected for the first quarter, but really, as always, the focus will be on the outlook and how much the recent price hike, as well as the pullout from the Russian market, the suspension of services there, will impact the company.
Is there a show? Is there a hot Netflix show right now that you're watching?
Bridgerton. Season 2. Not as good as season 1, but...
I prefer Seinfeld. I will be watching crypto. Today's big take is on the biggest whale the most watched whale. He's not the biggest, Do Kwon, but talking about the lunatics and Terra. We're going to talk to someone who's a much bigger whale in terms of his presence in the Bitcoin and the crypto world. Sam Bankman-Fried joins us, the CEO of FTX. One of the biggest exchanges in the world. And then we have Jamie Leverton. She is the CEO of Hut 8 Mining. Anna?
Lots of crypto focus then. Here in the UK, we'll be focused on the politics. We'll be watching Prime Minister Boris Johnson appearing in Parliament. The first time he's speaking since being fined over those Partygate scandals. More on that, no doubt, later in the day. This is Bloomberg.
worries about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So far, people still expect inflation's going to come back down.
If wages continue to strengthen, we're not going to go back to 2% inflation.
Inflation is going to come off these extraordinary highs, but not quickly.
We're not of the opinion that 2% gets us to where we need to be from an inflation slowdown standpoint.
I do think it would behoove the Fed to get a move on.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures on the S&P down 0.2%. TK today is Burn Your Mask Day.
It's Burn Your Mask Day. This actually happened to me on a plane a couple days ago, John. The Gulfstream, Francine had the Gulfstream. I had to do this. I had to take the martini.
And then get the mask back up. Sip and put it back on.
Put the mask on between sip.
And then sip and put it back on.
And then take it off and take another sip. And, you know, there's a lot of serious stuff going on, including the new horror in Ukraine. But, John, you know, this is surveillance, folks. When we invented this, this is what we want. You need to watch this morning. Amesh Adalja will join us, and he will tell us what to do.
Well, he'll talk about the science, Tom. He won't tell us what to do, because ultimately we're going to do whatever we want now, aren't we? You can wear one if you want to. You don't have to wear one if you don't want to. Uber joins the club, Tom. Uber is the only place in New York City where I still have to wear a mask, and that ends today as well. They announced that on their website in a statement just moments ago, Tom.
And the good news, pandemic deaths now migrating under 500 per day, which is constructive along with hospitalizations as well. John, I'm going to go to Japanese yen. I know it's distant. It's the other side of the globe. It matters. All sorts of people writing this today. Carl Weinberg really tears apart the treacherous moment for the yen and talks about the secular change there. This redounds right back, John, to Chairman Powell. He can't ignore a 128 yen.
TK, let's talk about it. 13 days of weakness against the US dollar, a record streak going all the way back to records back to the 70s or something like that, Tom. 128 is a big deal. And the fact is, the Japanese are pushing back. And it's not making a difference. And that's what gets my attention.
The jawbone's got to ramp up here. Alan Ruskin channels his inner Robert Cinch, Bob Cinch, the legend at a number of shops, including Bear Stearns, and says, look, there's two things here. There's the yield story and the trade story. Japan in the last 90 days, 39th of 45 nations in export weakness. That's not a good statistic when you're trying to strengthen your currency.
Bramo dollar yen, 128.33.
And honestly, it seems like exactly to your point, jawboning won't work anymore. So then do they have to change their yield curve control policy? How do they do that when they own the market? And frankly, what are the consequences? This is where really the rubber hits the road. what are the consequences of a very weak currency or a dramatically weakening currency in a world where inflation looms much more than it has in decades?
Anything to say on the mask mandate in America and airline hospitality and customer service? You've got something to, throw in here?
I appreciate that. Honestly, I think it is a very delicate dance. And we're talking about the social aspect and we're talking about the scientific aspect. I think at this point, there is more of a reason to not wear a mask. But if things tip, how do you go back at a time when there are worker shortages? And how do you deal with the fact that pilots could be sent home sick and then more flights canceled? There are just certain practical considerations. Eventually, I'm not the mask police. I know you guys are going to cast me as the bearish mask police for the rest of the show.
Not what I was implying
100%.
at all.
But I
I'm
think it's
excited for airlines to get back to focusing on hospitality and customer service.
Totally agree.
And getting away from being a mask police on a 6 or 7 hour flight, not through experience, of course, Tom.
She's up off Tupper Lake before black fly season wearing masks. It's required. You have to have a mask in your 18-foot Grumman canoe.
Honestly, the point here is it is important not to swing totally in the other direction and disregard science as new variants come up. I'm just saying there is a way to be cautious and to dovetail into a post-pandemic reality that isn't necessarily extreme one way or another.
Well, who said anything about disregarding science? Nobody said that.
No, but I'm just saying going forward, burn the masks. It's this moment of freedom. It's a matter of, has the science shifted to masks not being as useful anymore? And we'll talk about that with Amish Adalja. It'll be fantastic.
That is a great tease for our guest later this
to move
hour.
us on.
Or is it in the next hour? I don't know. I'll be told in a moment. Futures are down about 11 points on the S&P. We're down 1/4%. A Bramo rant is coming up on masking a little bit later in the programme. Yields are higher by 3 basis points, approaching 290 on a 10-year, 288.38. Lisa, on a 10-year in America.
All right, let's whip through what we're expecting for the rest of the day. Today, President Biden hosting a call this afternoon with the leaders of France, Germany, Italy, Japan, Canada, Poland, Romania, and the UK. In the European Union, the focus really is going to be how do they proceed with the war in Ukraine as it takes a new tact. And really what I find interesting is that gas prices, natural gas prices in the Euro region have actually come down to near where they were before the conflict. How much are people pricing out any kind of increase in the bans on Russian gas imports? Because frankly, it just isn't going to work in the short term. 12:05 p.m. we get Chicago Fed President Charlie Evans. He's going to be the latest in the roster of Fed speaking with the Economic Club of New York. Here's what I'm watching. Longer-term inflation expectations have risen to the highest levels going back to 2014. And this is based on the five-year forward break-even rates. Basically, even as the Fed jawbones up rate hikes that are increasingly aggressive, people still don't think it's necessarily going to be enough to curtail longer-term inflation trends. That is what I'm watching. Also today, earnings continue. 15% of S&P companies are reporting this week, 69 companies. Netflix reporting after the bell. I will allow you both to rant, John and Tom, about the idea of people cutting their streaming services because we are seeing that. And Netflix shares down 43% year to date. Everyone will be focusing on, as inflation continues to eat into budgets, do people cut their subscriptions to, I don't know, 90 Day Fiancé or whatever else you guys watch?
A great article in the FT on that recently.
That was a great article.
I'm only allowed one rant a segment, so I've used that already. Steve Chevron joined us now, Head of Multi-Asset Solutions at Federated Hermes. Steve, anything to say about the airlines?
I'm just glad that Tom can enjoy a martini in the class and sophistication of which he is accustomed to.
Mr. King, can you please
The world is healing.
Sips of Tang?
Steve, let's talk about the world healing, because at the moment, there's still a defensive bias gripping this equity market. The outlook for a lot of people is murky, let's put it that way, and cyclicals have underperformed, defensives have started to outperform. Do you want to lean the other way?
No. I mean, you know us. We've been one of the most bullish shops on the street for the last 15 years. But we think this is a time for a defensive play. And I think what it really comes down to, John, and Lisa was touching on it with the break-evens, the Fed's not doing enough. You've got to get the real yield or real interest rates at least to zero before you can start thinking about taking, 8% inflation and making it 2% inflation. And that suggests there's upside risk to the amount of hikes that we're going to see over the next 12 to 24 months. And as long as that dynamic's in place, we tend to lean a little bit more defensively here.
Real yield almost to a negative 0.04 this morning, pulling back to negative 0.06 right now. Steve, I want to talk about in the investment game what my great mentor Meghdon Desai said, which is all that matters is profit. We have profit companies, particularly profit tech, and we've got whatever the phrase they use, loss-making tech, whatever it is. How does Federated discern between those two groups, and how do you place new capital?
Yeah, it's a great question. I mean, I think the issue that's facing tech isn't so much a fundamental issue as it is a valuation issue. They were trading 40 to 50% more than they had historically at the peak of the pandemic. And so as they're repricing lower, that repricing is much more severe for a company that doesn't have earnings. For companies that do have earnings, we think there's better fundamentals, but again, we still think they need to reprice lower. Tech can't trade at 30 or 40 times in an environment where interest rates are going from 0 to, let's call it 3% on the Fed funds rate. So we think there's pressure on the whole sector. We think those companies that have either taken a bigger hit in terms of their price already and or have solid streams of earnings, you can start to nibble. But we don't think that the pain for growth company and tech is over yet. We think that repricing is probably about halfway done at this point. Wake me up when you've got the Russell 1000 growth trading closer to 20 times, not 25 or 26.
So, Steve, for those of us who don't have our calculators out, how much more of a decline are you expecting from here, more broadly in the big tech space?
Yeah, again, you were trading at, you've never traded above really 21 times prior to the pandemic. You were at 30. Your average prior to the pandemic was 19. It suggests, peak to trough, something in the 30 to 40% decline range. And, we've seen probably about 20 of that. So, again, I think it's time to start nibbling on quality names, but understanding that a buy that you make today may require further averaging in over the coming months. We just don't think that repricing is done yet. Maybe we're about halfway done.
Steve, awesome. As always, buddy. Great to catch up. Steve Chevron there of Federated Hermes. One piece of research that gets my attention this morning, it comes from B of A. It's on the outlook for China. They've cut their forecast on China GDP from 4.8% to 4.2% this year. In the base case, in a bearish scenario, can you imagine, Tom, Chinese GDP with a 3 handle?
No.
That's their bearish case, their bearish scenario, 3.5% for this year.
Socially, I can't imagine it. This was a theme in Washington, John, where you were on sabbatical, but the basic idea here is WTO, global growth, 2.8%. Somebody else the other day, 3.x%. And we see this morning what Pierre-Olivier and the team over at IMF is doing in terms of under 4%, under 3%. Who knows, John, but it's not a normal morning for international economics.
Alita, it's a great piece to read. They go on to say that China would likely adhere to the zero COVID strategy at least until the 20th Communist Party Congress in the fall. The economy will likely continue to bear substantial costs throughout the year, and the spillover is a factor in this research piece as well, the spillover to the rest of the world.
So not to be conspiracy theorist, but are we going to get to 4.2% on the official data, or are we going to have to derive a 4.2% from unofficial data when it's really like a 3%? My point being that the recent data that came out with GDP surprising to the upside was so shocking across the street that conspiracy theories made it into the front pages where people were openly questioning how this could possibly be at a time when unemployment rates were increasing and retail sales were increasing. So in other words, if they can't even publish what the actual rate is, how are they going to actually actively address it with stimulus?
I would say look to corporations to get a clean read on what's happening in China, and look to Apple. Yeah. April 28th, is it, Lisa? Yeah. To get a decent read on what's happening there.
Actually, there have been some reports that their Apple factory, their Foxconn factory, has been somewhat sheltered, but still, they have to get out. They have to be able to be shipped. They have to really rely on some of the supply chains inside of China.
Yeah. Listen to this from B of A. The region surrounding Shanghai accounts for 21% of China's industrial production, 36% of exports. TK, wow. Some big numbers.
Those are huge numbers for a city completely locked down, seriously locked down.
Futures down about 1/3% from a rainy New York City. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine says Russia has launched a full-scale offensive to take control of the Donbass area in the eastern part of the country. Russia has made the capture of the Donbass its main goal in the war now that it has failed to seize the Ukrainian capital, Kyiv. The attacks are taking place along a front of more than 300 miles. St. Louis Fed President James Bullard says the central bank shouldn't rule out rate increases of 75 basis points to fight inflation. In a presentation to the Council on Foreign Relations, Bullard said the Fed needs to move quickly to raise rates to around 3.5% this year. He also said that talk of a U.S. recession is premature. China sees multiple risks to the economy as the coronavirus outbreaks keep growing still. It's pledging to meet its ambitious growth target and stabilize jobs. The state-run news agency said the economy still has many strategic advantages. China has set a growth target of around 5.5% for the year. And most major U.S. airlines are no longer requiring travelers or employees to wear masks on domestic and some international flights. That came hours after a federal judge overturned a mandate for passengers to cover their faces. The airline industry had lobbied the Biden administration to ease that rule. Meanwhile, Uber is dropping its own mask mandate in the U.S. Apollo Global Management is interested in helping finance a bid for Twitter. Bloomberg's learned that Apollo could provide Elon Musk or another bidder like private equity firm Thoma Bravo with equity or debt to support an offer. Twitter shares posted their biggest gain in 2 weeks on Monday after the company launched a poison pill defense to thwart Musk's bid. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Earnings season is here.
It's been a particularly difficult quarter.
What is the forward outlook for companies?
Bloomberg is fastest with the numbers and analysis.
Where is the value here?
There are opportunities out there.
Bloomberg, the fastest numbers and analysis you trust.
Fighting of Mariupol, as you guys have all seen, continues. The Ukrainians are still resisting. The city has not fallen to the Russians, but they continue to pound it from the air and through long-range fires.
John Kirby there, the Pentagon press secretary from New York City this morning. Good morning. Futures negative on the S&P. On the Nasdaq too. On the Nasdaq 100, we are down by about 1/3 of 1%. On the S&P 500, we are lower, softer by 0.2 of 1%. Yield still climbing, very, very close to 3% on a 30-year.
Yes,
Look out for that, Tom. 298 right now on a 10-year, 288.58.
John, you're too young to remember when the 30-year was a benchmark, but my benchmark of my childhood is near 3%, and I'm sorry, it's a big deal. It's like Dow 10,000.
Is that what it is?
Yeah.
Or is the Dow 34,000?
Thank you.
That was just
Under
for you.
36,000.
This is for you too. Dollar yen higher for a 13th. I'm not going to do that. 13 days of weakness for the Japanese yen against the US dollar. It's too easy, Tom. Dollar yen 128.33 this morning. Pick it up, TK.
Okay, there's the yen, and we're going to get serious now. Joe Matthew joining us in Washington, and Mark Champion in a somber London as well, looking over to a new war in Ukraine. Mark Champion, I've got to go to you. Mr. Putin, I believe yesterday, saying sanctions aren't affecting baloney. Henkel, the chemical conglomerate in Germany, has been holding out. Moments ago, Henkel can't quantify financial impact of leaving Russia. They will exit its business activities. Mark Champion, you are expert at this. Are the sanctions working?
Well, they are definitely having an impact on the Russian economy, and you've seen unemployment going up very strongly in Moscow. There's a lot of impact just on growth, employment, and so on. I mean, what Putin can point to is that the ruble has managed to recover in part due to capital controls and basically some very competent macroeconomic policy making and central banking, and that's been a marker for Russia for a while.
Joe Matthew, Zoe Schneeweiss out of our Zurich office, who's absolutely fabulous, has a Bloomberg chart this morning. I didn't know this, Joe. The amount of support, humanitarian and military, from the United States dwarfs anything else from any other company. When are those other countries gonna pony up and start supporting Ukraine?
That's a great question. Ukraine would like an answer to that, and there are going to be representatives from Ukraine here in Washington asking that very question at the G20 and IMF meetings this week. They are asking for more help, not just for military, but for humanitarian. That's the point we're talking about here. To your point, Tom Keene, it's about managing the refugee crisis. It's about managing a food crisis. And the President of the United States will talk today with our European allies about the other side of this. Potentially another layer of sanctions could include banking, could include a potential European oil ban, but they're also going to talk about delivering these weapons, which is at the moment the most urgent situation in Ukraine.
Joe, it's kind of controversial, but the U.S., in particular, Treasury Secretary Janet Yellen is participating in a number of IMF and World Bank meetings, even though Russia may be there, even though Russia is included, despite some of her warnings before the events. What do you make of that? How controversial is that in Washington, D.C.?
Well, we're actually curious. A great question, Lisa. How many meetings might she skip? There are going to be some, one particularly on economic architecture, that apparently a Russian representative will be in the room. Look, this is not exactly Janet Yellen's forte, going head-to-head with representatives from other nations in a public forum, but that is being suggested by some, that it might be more meaningful for her to not only get business done with Ukraine in spite of Russia's attendance, but maybe go head-to-head, call them out, show up at a meeting in person, and call out Russia for what it's doing right now in Ukraine. That would make major headlines across the world.
Mark, meanwhile, we are hearing that the incursion into the Donbass region has begun, the offensive by Russia. Do we have any sense of what the ultimatum will be, what the new goals are, where the yardstick is, especially as Sergei Lavrov comes out and says that Russia will not use nuclear weapons in Ukraine and tries to sort of make it as though they're still on the world stage in some capacity?
Well, the thing that we know is that the Russians want to take all of the two regions that make up the Donbass. That's the Donetsk region and Luhansk. And, Russia's been there since 2014, but, it and the separatist fighters there held about a third of it. They now held more than a half. And they want the rest. So that includes Mariupol. It includes, an area going right up towards, but not all the way to Kharkiv. So that we know. But, what happens then once they've got it? Because the war's not over. The Ukrainians won't just down tools. So, what happens after that, we don't know. And exactly what Putin's, long-term goals are, again, we can't be sure.
Mark, we have seen bouts of Ukraine, surprise, excellence, the sinking of the ship, etc. Do we expect that that's really the only way they're going to fight, are bouts, or are they actually going to win battles, win territory?
Well, that's the big question that's being asked really for the first time right now, because this battle in the east is going to be very different from what's been seen before. Up in the north, it's very forested, and you saw convoys get stuck on roads and all that kind of stuff. They just couldn't get off. Once they were around Kiev, they were in urban areas and they were fighting, in urban places where the Ukrainians could conduct ambushes. Now they're going to be in open plains. There's been trenches along that 300 miles or more line that is going to be the front line of the fight. For years, but it's going to be a very different fight, much more determined by, air cover, heavy artillery, long-range artillery, tanks, all that kind of stuff. And that's why the Ukrainians are so insistent that they need a lot of heavy weaponry, and now.
Mark Champion, thank you, sir. As always, Bloomberg's very own in London. To Joe Matthew, too, down in D.C. Joe, we'll catch up later. And, of course, you can catch up with Joe a little bit later, too, on Stand On Bloomberg Radio, weekdays at 5 p.m. Eastern. On the tension between Russia and Ukraine and what the Europeans can do about it, Bruno Le Maire making the headlines, the French finance minister, in the last 24 hours, Lisa, suggesting it is necessary, quote, more than ever, to stop oil imports from Russia.
Interesting, the focus on oil and not natural gas, considering Germany's dependence on natural gas. And I do wonder if that's the sort of shift right now in Europe. Can they ban oil imports while continuing the natural gas imports as they try to get other sources? Also, natural gas prices in the U.S. soaring as people consider what it means for them to export to the European Union.
The French government here offering a bit of a timeline, Tom, hoping to convince European Union partners in the coming weeks.
Tom?
Excuse me. No, I didn't hear you say Tom. I thought you were going to Lisa on that, John. I'm so sorry.
Don't worry about it.
It happens.
What's distracted you?
I had my mask on. I was between sips of my Tang. John, the French government right now is in an election. And you got to see I think the impatience here is tangible, John, with Germany. I think that's something that's been unspoken of this week.
I'd love to find out what you were actually doing just moments ago. Futures down about 1/10 of 1%.
Having my Tang.
I spent years cleaning this up. On the Nasdaq, we're down about 0.2 of 1%. Yields are higher by 3 basis points at 288.19. From New York City, with Lisa Brammett and Tom Keene, I'm Jonathan Ferro. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
You know, we spent a long time talking about some of these big tech names as if there's not an economic story embedded in them. Why are we caring about Netflix a little bit later? This is why we care, because there is an economic story embedded in that company. Are people cutting back from streaming because of inflation? Netflix coming after the close, looking forward to that. That stock year today, down by more than 40%. The NASDAQ 100 down around about 15 this morning. The NASDAQ 100 is down by 0.2%. The S&P is down about 0.1%. Switch on the board and get to the bond market, 2s, 10s and 30s, and just sit on 10s for a moment and remember that we were at 233.80 to close out the month of March, and right now we're at 288.38. Yields higher by 3 basis points. This curve steeper again on a 30-year, up by 3 basis points and getting closer to that line in the sand. A 3-handle on a 30-year, right now 297.38. So high yields in America, the prospect of tighter monetary policy from the Fed, and this is happening at the FX market. Dollar yen, what a run. The yen is weaker against the US dollar for 13 straight sessions. Dollar yen right now 128.25. And Tom, the finance minister came out overnight and said, we're looking at this with a strong sense of vigilance. The verbal intervention is not working. That currency pair today, a move of 1%.
And John, to the whispers and the tea leaves of the greater economics, Johnson & Johnson, which is not a small company, indicates, John, what you were just alluding to. They're using cash to raise the dividend by 6.6%, but they adjust dramatically. They view forward, John, out 12 months. And that's what we're all going to be doing for the next week, dovetailing that in to what we're going to hear from the IMF this morning.
You know what we don't hear from J&J anymore? Don't hear much about the vaccine, Tom.
Yeah,
what's the latest with the vaccine?
Yeah, they moved on from that. They made clear in the headlines this morning. They made clear they're moving on.
Not a part of the booster regime in a big way here in the United States either. Bramo just seems to be not a story for them in the same way anymore.
They're trying to move on because their vaccine was proven to be perhaps less effective than some of the other vaccines. And how much does this continue to be a hit for their bottom line and frankly for their shares versus something that was just a passing phase in this endemic world?
Any comments on masks while we're here?
No. I've got some comments on Netflix. No, carry on.
Have you? Do you have some comments on Netflix?
Let's move on. We can get to the yen.
We can move on. Dollar yen, Tom, 128.
There we are. We're watching yen. We're watching the rate of change of all of these. An expert at the rate of change is George Concalves, head of macro strategy. MUFG, of course, with their great Japanese affiliate. George, you're in meetings on yen. I must ask, given the MUFG affiliation with Japan, your official line on yen at MUFG, and I know it's not your remit, but I'm fascinated if you people are waiting for 130 or do you have a different target for where the government steps in?
Look, at the end of the day, what we're really seeing is like proof positive central bank divergence between the rest of the world and Japan, keeping very ultra accommodative rates. And so as long as that continues, it's really going to be difficult to draw a line in the sand of where the yen may go up to. But look, it's a rate of change thing. I think ultimately at some point, both what's happening with the yen, but also what's happening with long-term rates in the U.S. especially are kind of connected, and we need to see some stability for one to feed off the other.
Fancy guys like you trot around this phrase convexity, which for those of us mere mortals is acceleration. Are we seeing convexity or acceleration now, where we get momentum to these yield moves, or can they reverse and go the other way?
Look, the convexity trade is really not what's happening here. This is purely a grind higher in rates. Each morning we wake up, and I know you all follow this very closely as well. We wake up to higher and higher rates. And what's different versus all the other episodes that I've kind of experienced, especially in the last 15 years, but really going back to the 1990s, is this is a global phenomenon ex-Japan, right? And so you're seeing sterling rates, you're seeing European rates having larger moves like on a day like today, more so than U.S. rates. And so as long as we continue to have this sort of push and pull from global rates or repricing because they were too low, maybe not U.S. rates were too low, but definitely European rates were, that this is going to continue. Now, how high could it go? I mean, we are at a point where we've broken a lot of the long-term metrics that I look at, and I think a lot of other strategists as well across the street. We're in this no person's territory where we're nearly 3 standard deviations away from the long-term trend. We're well above the Fed's long-term dot. And we are at entering into deep value, but no one's really stepping in to be a hero here.
Deep value, Tom.
Deep value.
Not yet. George, I think the character of this sell-off has changed, and that's what gets my attention. We were focused on the front end, and this big sell-off emerging as we start to price in a Fed rate hiking cycle. Then we got comfortable with this idea of flattening, then yield curve inversion. Then all of a sudden this month something changed, George. We had a breakout in the long end and a steeper yield curve in America. And I'm trying to get my hands around, I know Lisa doing the same thing, trying to get our hands around. What's the catalyst for that, George? What's been going on the last couple of weeks?
Look, I think our markets operate on narratives more so than numerology nowadays and just overall just calculations. I mean, we went from a very flattening posture, the inversion concerns to your point, and some of those obviously result in large trades and positions being put on, and you can see it in some of the public data where positioning has started to go the other way. So I would attribute at least half of the re-steepening a positioning unwind. The rest of it is more of a buyer's strike. We're clearly seeing concern for, like at some point the Fed's going to make a judgment call between accepting a recession and forcing us into one, or just embracing stagflation. And I think that's what the long end is trying to wrestle with.
George, a buyer's strike from whom? And this actually dovetails into where we began with the idea of Japanese buyers of treasuries perhaps not stemming the sell-off. In other words, they may not come in the way that they have in the past. Can you talk a little bit about what you're expecting there?
Sure. I mean, we actually did a number of work on this, and I've been following this for decades now. And Japan has been a huge supporter of the U.S. fixed income markets, but at the right price, but also at the right FX hedging costs. And we're clearly in a different environment where the outlook for inflation is extremely uncertain, and Fed is much more hawkish than they've ever been. And so, like, it's our view that Japan is not going to step in here until there is stability in rates, not just this kind of nonstop grind higher in rates. We need to kind of start to establish a range, not just keep moving higher. And quite frankly, there's still better alternatives to U.S. Treasuries from the Japanese point of view, which is at some point mortgages are going to offer value once the Fed does QT, and also European rates. When you kind of do the FX calculation, it actually favors those markets more so than U.S. Treasuries.
George, can you give us a sense of how much a buyer's strike from international buyers that may find it too expensive to hedge out currency fluctuations right now, how much that's going to contribute to a further rise in longer-term yields?
I'm not sure if it's going to contribute to a much larger rise, but it's going to keep rates elevated. I think that's the clear distinction. I think that this idea that we rally back is going to take really U.S. fundamentals and U.S. investors to really step in. And look, we've had a terrible first quarter, as you all know. Q2 hasn't started off great either. We're probably going to maybe at max get to a 15% drawdown from market value and bond market. At some point, that will impact the equity markets, in our view.
That's right where I wanted to go, George. You look at the Bloomberg Lehman Total Return Aggregate Index, and it's like -8%. And you just said a drawdown of -15%, particularly if you put credit into it, is, well, what happens in a bond bear market? So many of our listeners and viewers have never enjoyed this drawdown. What's the behavior in a bond bear market?
And look, none of us either, unless you went back to the 1970s, and it's a much different marketplace than it was back then, and much more interconnected nowadays as well. So I think we are in a bond bear market. That's for sure. Let's just kind of just table that for a second. Let's then bring in QT and financial conditions tightening, which will be the only kind of respite that might eventually stop this bond sell-off that we've had.
John, did Goncalves just call me an old fart?
Something like that.
Yeah, I thought so.
Something.
He nailed that.
For forgetting to speak and not paying attention earlier in the hour.
Yeah, I
think he was. I'm joking. I'm just joking. Let me talk about the German bond market just briefly.
Do that. I'm going to sip Tang.
Thank you, TK. George, I wonder if a new element is present in this market too, one that we didn't experience in the previous cycle, is at the same time the Fed is pulling back, the ECB is set to as well. And I just wonder how much of an anchor the German bond market has been around the neck of the Treasury market over the last 10 years as well. Because as you point out, this move we've seen in the German 10-year, it's bigger this morning by 8 basis points. We've got a German 10-year moving higher at 92. We closed out March at 55 basis points. We've had a big move there too. So, George, I just wonder that European dynamic, how important you think that's going to be in the coming months as they set to unwind what they've been doing with their balance sheet and the Fed is making an effort to do something similar at the same time?
No, I think it's super critical. I mean, I think there's been a lot of work that a number of us have done over the years. The global rate phenomenon, birds of a feather flock together. That whole theory, I think, does play in reverse as well. And we're seeing evidence of that as rates are rising. And European investors are going to have a local bias over time if their rates can manage to stay as high or go even higher from here. So I do think that it forces local investors to stay in their own jurisdictions. And at that point, you're competing with other asset classes more so versus benefiting the global rates market. And so, like, you're going to look at credit. Is credit supposed to be trading where it's supposed to be trading? Even equities. At some point, the downside of this, if it gets too bad, if we, let's say, get rates up to 350 on the 10-year, I'm not calling that our forecast, but if we did, then you have a viable alternative to a lot of other asset classes here domestically. And that's how you can finance QT and actually finance the U.S. government going forward at the expense of other markets. I'm not sure the Fed wants to cross that bridge, and at some point they will stop tightening. But I do think that it really comes down to financial conditions.
288.77 right now on a 10-year. George, great stuff. As always, George Goncalves there of MUFG. Tom, you know the story well. We've got the Federal Reserve looking to reduce its balance sheet at the same time. The ECB is trying to wind down QE, and all of this is coming together at the same time.
Yeah, I look at the Fed exercises almost, John, not to get mathy here, but like differential equations. Somebody had a great paper out last week on this, and I really want to emphasize, John, it's not a lot of media certitude about what any given central bank's going to do in this modern, original economics. We really don't know the flows and the stabilities over the next 18 months.
They've got a plan. At least can they execute it?
Their plan is to get to the next meeting is their plan.
And frankly, what is going to be the consequence of them all doing it at once? I think that is really what we're looking at a time where Japanese bond buyers matter to the U.S. Treasury market.
The 30-year in America, 2.98, getting very close to 3%. From New York with Tom Keene and Lisa Bramett and Jonathan Ferro, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In Ukraine, President Volodymyr Zelensky says a long-anticipated Russian offensive has begun. Russian forces are said to be targeting the Donbass region in the eastern part of the country. The assault is taking place along a front of more than 300 miles. It's a fresh blow to Russia's billionaires. President Vladimir Putin has dropped the curtain on the era of foreign stock listings. Putin has signed off on legal amendments that require Russian companies to delist their overseas shares. That could force tycoons such as Vladimir Putin to reconfigure the structure of businesses they hold via overseas shares, paying foreign currency dividends. U.S. Treasury Secretary Janet Yellen will participate in some sessions of the Group of 20 this week. The U.S. is backing off any suggestion that its officials would boycott G20 meetings if Russia takes part. Yellen will avoid some meetings of the G20's finance ministers in Washington, but she will attend others focused on the economic fallout from Russia's invasion of Ukraine. In Shanghai, authorities reported 7 more deaths from the coronavirus. China's financial hub is grappling with a record outbreak that's brought unprecedented disruptions to residents and threatens the country's economic growth. The 25 million people living in Shanghai have been in lockdown for weeks. And Bloomberg's learned that cryptocurrency startup blockchain.com is planning an IPO that could take place this year. The company is currently interviewing banks. In March, blockchain.com said that a funding round valued it at $14 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
CDC recommended continuing the order for additional time, 2 weeks, to be able to assess the latest science in keeping with its responsibility to protect the American people. So this is obviously a disappointing decision. The CDC continues recommending wearing a mask in public transit.
Jen Psaki there, the White House press secretary from New York City this morning. Good morning. Futures are negative on the S&P and on the Nasdaq too. We're down 0.2% on both on the S&P 500 and on the Nasdaq 100. Yields are higher by 3 basis points. The 288.58 on a 10-year, getting very, very close to 1% on a German 10-year at 92 basis points, and very, very close to 3% on a US 30-year at 298 on a 30-year right now, up 3 or 4 basis points. So the statements all started pouring out from the 5 largest US carriers. One airline, Delta, said this: "We are relieved to see the US mask mandate lift to facilitate global travel as COVID-19, Tom," here's the line from them, "has transitioned to an ordinary seasonal virus."
Right.
Their statement out just yesterday.
This word endemic, and that's the airline people playing physician. He has become, John, is visible, and the only one I can think equivalent in media is Peter Hotez. Dr. Amish Adalja joins us now, senior scholar, Johns Hopkins Center for Health Security, with one of the most interesting academic paths to excellence in epidemiology and virology. Dr. Adalja, thank you so much for joining us on this important day. Is Ed Bastian and Delta Airlines correct that this is a seasonal virus?
That's its ultimate destiny. That's what it always was going to do. I think it's shocking because people haven't really transitioned to that in their thinking, that COVID-19 is becoming like other respiratory viruses, but that's what it's going to do. It's going to join the other members of its family and be something that it always has a baseline number of cases, hospitalizations, and deaths, probably accelerates when it gets colder, decreases during the summer, and becomes something that we can treat with vaccines, monoclonal antibodies, antivirals. So I think that foretells what was always going to be the case. And I think we're there.
Well, we're there right now, and then in the next step. Now, we're under 500 deaths listed by any number of surveys, including the great math of Johns Hopkins. We were there before. Is it all clear, or do you have a trepidation like we had under 500 deaths before?
I do think at this point that 500 deaths is more sustainable than it was in the past, because what we're dealing with now is a population that is heavily vaccinated, has a lot of immunity from infection, has access to antivirals, to monoclonal antibodies. So we are in a tamer phase of this virus. Yes, there's going to be new variants. Cases may go up again. We may see deaths increase to some level, but I don't think we're going to go back to the bad old days when we didn't have tools, when we had so many people without immunity that were high risk, getting infected, getting hospitalized, and dying. So I think that hopefully this is where we're going to in terms of a baseline. But the virus could surprise us, but I think that we're on much stronger ground now than we were in the past.
Dr. Adalja, what's the science delineating between needing to require masks by everyone and not needing to?
Well, I think that it gets muddled because we're talking about when the government requires it versus when they recommend it. I think if you're a high-risk person, yes, there's always going to be a COVID-19 risk, and you have to continue to think about wearing masks in high-risk situations. I don't think airplanes themselves are very high-risk situations because of the number of air exchanges that occur, but maybe the subway, a bus might be. But remember that one-way masking works. You can get access to an N95 or an N95 equivalent and wear one of those masks if you're in one of those high-risk situations. Just because the government doesn't require it doesn't mean you can't do it, or doesn't mean that the airlines themselves can't require it. Because when I take care of patients with tuberculosis, I wear an N95 mask. That's one-way masking. It works. So I think we have to come to a point where we know that there's some risk. Masks work. And for those people who choose to wear a mask or want to wear a mask, they can wear a mask. And we're talking about 2 weeks here because the Biden administration was set to let this expire in 2 weeks. So it's not as much of a mess as people are making it out to be.
Dr. Adalja, what's the damage to the healthcare industry and frankly to health security going forward that masks are more political and have become more political than they are a tool of science as they originally intended to be?
That's the story of the whole pandemic. Everything we've talked about, from antivirals to monoclonal antibodies to masks, have all become kind of viewed through the lens of whatever political tribe someone belongs to. And we're increasingly tribalist with everything we do. And that's where masks have become what they've become, instead of being viewed as a tool that people can use to decrease their risk of transmission and spread. And I think it does make a big difference, because if the population doesn't trust public health authorities, if they think that politics is all infused in it, they're not going to listen the time you need to make a recommendation recommendation that people do certain protective actions for COVID-19 or for the next pandemic when it occurs. And I think that's the long tail of this pandemic, that we've created this breach between public health professionals, infectious disease doctors, and the general public. They will never trust us again, and I think it's going to take a long time to rebuild that.
Well, I'm going to rip up the script. That's such an important statement. Dr. Adalja, how does it's not going to be the AMA at dinners. How does the medical community get the trust back of the American public?
I think we have to be transparent about where the public health communication mistakes happen, how politics got infused during 2 successive administrations into this response. And people have to go back to their primary care doctors and think about who they trust and why they trust those primary care doctors. And I think we have to take that lesson of how people interact with their primary care doctors and extrapolate it to us when we're on television or when we're pontificating about the state of the pandemic, because we see that people trust their doctors, but they don't trust the doctors on television because they think there's a lot of politics that's gone on. I think we have to really rebuild the entire thing, and we have to make public health agencies independent of the administration that they're serving, and they have to be more like the Fed chief than they do a political appointee that is managed through the White House, whether the White House is Republican or White House is or Democrat. That's what I think that the problem is that politics has gotten so infused into public health now that it becomes something that people only think about as this is what the Democrat position is on this is what the Republican position is, and not the fact that there's a reality-based position on these issues.
Do you think also, to some degree, Doctor, and I'd love a final thought on this, that the people that worked through the pandemic are the wrong people to work out of a pandemic because they just can't move away from it?
I think there is a lot of people are sick of seeing some people's faces on television, probably including mine. Yep. But I do think that there's a lot of people that have the expertise in pandemic preparedness that are going to be who we need for the next pandemic, because many of us have been working on pandemics prior to this. So I don't think it's necessarily that we have to switch the team. I think it's just that people have to think about their communications and think about how they may be being viewed politically and try to steer clear of it by being a source to everyone, no matter what tribe they're in.
Really, really thoughtful stuff as always, Doctor. Great to catch up. We're not sick of seeing you.
No,
Dr. Amish Adalja
not at all.
Of Johns Hopkins Center for Health Security. Tom, some important comments. One-way masking. In this conversation, that's something that jumped out to me.
And what's great about this, John, is this is a guy with a prestigious degree from Carnegie Mellon in industrial management, huge program, who then said, I'm going to go out and get an MD. And that's a different kind of person.
Because the conversation we've had, and it's dominated conversations around the world for the last several years, is two-way masking. Lisa, this idea that I'm wearing a mask for you, not for myself, and that's something the doctor there is pushing back against.
The shift to a personal choice rather than a public health decision. And I think that that's key in getting to the endemic phase. The question that we will be asking for a long time is, how will we rebuild trust? And I think the fact that Dr. Adalja enunciated that so well is really important.
Futures on the S&P down 0.1%. On the NASDAQ, we are down 0.2%. Bramo is hosting a mask-burning party at her house a little bit later.
With lots of bears.
With lots of bears.
It's going to be amazing.
Selling stocks live. This is Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
So far, people still expect inflation's going to come back down.
If wages continue to strengthen, we're not going to go back to 2% inflation.
Inflation is going to come off these extraordinary highs, but not quickly.
We're not of the opinion that 2% gets us to where we need to be from an inflation slowdown standpoint.
I do think it would behoove the Fed to get a move on.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down 0.1%. The United States, TK, taking another big step away from this pandemic.
Really says that things are getting back to normal. We'll have to see. It was great to have Dr. Adeljan with us moments ago from Johns Hopkins, and he made clear this is the right decision, although he said it's only a few weeks before we were going to move on. But there's that symbolism, John. No masks on airplanes.
We've got to move on to earnings as well. Netflix after the close a little bit later, Tom. The performance of that stock this year, dreadful, down 44% year to date.
Well, you know, where's the profit? I keep looking at the FA screen. Paul Sweeney and I go back on this on another property, John. And the answer is, where's the profit on Netflix? It's not like Amazon. It's not like Apple, etc. But I go to J&J is just as important. John, here's something totally different. And J&J has a tepid view forward.
Where's the revenue growth? That's what I'm focused on now, Lisa. Where is the revenue growth for the likes of Netflix? And are people cutting back? Is that discretionary spend on things like this facing the cut?
And you're talking about, in particular, that Financial Times article that you mentioned earlier this morning about how UK subscribers are actually cutting their Netflix subscriptions at the fastest pace on record. But they were talking about, it wasn't just Netflix. It was really a number of the others, including Apple TV, and people kind of holding on to Netflix. But at what point do we see these types of discretionary spends being the victims of the higher costs of base living?
That's the earnings story. Let's talk about the FX story. Tom, I know you want to talk about this. 13 days of weakness for the Japanese yen against the US dollar. Dollar yen 128.36. In the face of some verbal intervention from the Japanese finance minister, who said, we're monitoring moves in the foreign exchange market with a strong sense of vigilance. Okay, sounds great. That's falling on deaf ears in foreign exchange.
Well, it is. It's falling on deaf ears, and I think there's an education. And I'm working on it right now, John. But there needs to be an education here on the long-term devaluation. What did Japan do? What they did is they devalued the yen to keep the house of cards going. And the devaluation is 56% is calculated by the IMF going back to 1995. And John, in that period in U.S. dollars, the Japanese index is up 13% in 27 years, and the S&P 500 is up 745%. That's all you need to know.
Today, it's not about what the Japanese authorities are doing. It's about what they're not doing, and they are not going to be joining that Fed rate hiking cycle, Tom, anytime soon.
Well, no, they're not, and they're miles apart. And it's just the whole thing here. Talking to Matt Hornbach yesterday, I thought was brilliant, John, with Morgan Stanley and his colleague, Dr. Feldman, Robbie Feldman. The whole thing here is we're finally where we've known we were going for years. This separation from Japan, it's here.
A 1% move on dollar yen this morning. Good morning to you all. Let's whip through the price action. Futures recover a little bit on the S&P, now unchanged on the S&P 500, essentially unchanged on the Nasdaq as well. Yields keep climbing by 3 or 4 basis points on a 10-year in America to 288.96. And Tom Keene, the significance of getting ever closer to 3% on a 30-year in America.
This is a
298.
A nominal lift. And John, we talked about housing yesterday. Do we have housing data today? I think we do, right?
We do. Yes.
Yeah, I mean, we got housing data. Lisa will touch on that. But, John, the point here is it's not like the yield lift of 6 months ago. There's something different going on, which is a general lift, which is bringing that inflation-adjusted rate up.
I think that was Lisa trying to tell us to shut up, Tom.
No, he was
I'm going to tell you what's coming up.
Well, no.
You tell us now.
Honestly, I didn't even put housing starts into the morning brief because there's so many other things that are happening.
True.
And frankly, each economic data point might not move the dial in the same kind of way that geopolitical events could. And I think that that's really what I've been grappling with, frankly, every morning. Today, President Biden hosting a call this afternoon with leaders of France, Germany, Italy, Japan, Canada, Poland, Romania, and the UK. The European Union and NATO as well will join this call. The question is how to proceed with the war in Ukraine. The focus, as John was mentioning, France really coming out and saying we've got to consider oil, we've got to consider banning it from Russia in terms of importing it to Europe. How much is the focus moving to oil and not natural gas, as natural gas prices in Europe do fall to near where they were before the conflict? 12:05 p.m. we hear from Chicago Fed President Charlie Evans. He's going to be speaking with the Economic Club of New York. Do they matter at this point when even jawboning is not sending down longer-term inflation expectations? Why is the 30-year Treasury yield rising? Because people do not believe necessarily that we are going to get inflation back down to 2% over the next 5 to 10 years. Tom, this is significant.
I don't mean to interrupt here, but this is really important, folks, on radio. The chart Lisa's showing is basically a chart showing the guesstimate of inflation getting back in the vicinity, Lisa, of 2006.
Yeah, and really, I mean, it's the highest levels going back to 2014. And this comes today as we have that ongoing roll of earnings. 15% of the S&P will be reporting this week, 69 companies. Netflix among them, John was mentioning, shares down 44%. They are set to report after the bell. How much can they remain resilient, John, as people pare back discretionary spending?
Bramo, thank you. As always, fantastic. Joining us now to talk about some of these names, including Netflix, Mona Mahajan, Senior Investment Strategist at Edward Jones. Mona, some of these names have been cut in half. Netflix is down 44% year to date. What are the data points you need to see top down, not just bottom up for the individual company story, to start looking at big tech again?
Yeah, John, it's been a brutal year for big tech. And, keep in mind, this is a year where we went off the zero bound in the Fed funds rate. We're probably heading close to 2.5%. Real yields, which were deeply negative for much of the last 3 years, are now starting to hit that zero bound. When that happens in that backdrop, what we really see is downward pressure on the growth sectors. And really, when you look at the S&P sector performance year to date, what we've seen is the underperformers coming from discretionary, from tech, and from comm services. So the growth tech parts of the market have really underperformed. In order for that to reverse, I think what we'd really need to see is somewhere down the road, perhaps in the next 12 months, when U.S. growth slows more meaningfully, perhaps investors start taking a look at where is their growth in the market. But in the near term, as real yields hit positive territory and as the Fed starts to move, we would think there would be continued downward pressure, at least avoidance of some of these growthier names for now.
We asked this question of Steve Chevron of Federated Hermes a little bit earlier about this defensive bias that's gripped the equity market and whether it's time to lean back in to the cyclicals. Are you saying now's not the time?
Yeah, generally speaking, a lot of investors are bracing themselves ahead of this big Fed move. The Fed is poised to move aggressively, probably 50 basis points in May, probably another 50 basis points in June. So ahead of that, how are investors positioned? You really need to position a little bit more defensively in your portfolios. The areas that have pricing power, and that really has been healthcare, staples, utilities. Even with high inflation, consumers will have to get their healthcare, they'll have to buy their staples, probably have to pay their utility bills. And so those are the areas that people have been gravitating to. We continue to feel that there may be a value cyclical bias, especially as we head into the spring and summer months. And so we continue to see value outperforming growth, especially, as we said, as valuation compression is likely as the Fed starts moving. And so defensive value cyclical tilt, I think, still holds over the next 6 to 12 months.
So what about financials? Do they count as growth or do they count as value right now?
Yeah, financials has been tough. I think within value, energy and probably industrials are the areas that really have been more defensive oriented. Financials have had a tougher time. The yield curve has flattened. We saw the 10-2 invert for a couple of days. In that backdrop, it's hard for net interest income and net interest margins to really rise in financial companies. What we do see, though, is as yields start to move higher, as perhaps there's some less pressure on the consumer and consumption, or at least more indication that the consumer will remain intact. Financials may, come back to some extent, but we still favor some of the more defensively oriented and some of the other value sectors.
There's a distinction here, Mona, in not necessarily wanting to lean into some of the more economically sensitive stocks and not necessarily seeing a recession. Can you parse that difference to basically suggest that we're not pricing in a slowdown and a tightening to the degree that you believe, but not necessarily heading into some sort of big downturn?
Yeah, absolutely. We think for 2022, recession is not as likely. I think generally what we've been seeing in this backdrop is that the economic metrics have held up. We talked about earnings being pretty solid. We have a very tight labor market. We certainly are seeing things like consumer sentiment, industrial production, even broad economic surprise indices have been moving higher. When you look at the fixed income market, credit spreads tell a pretty benign story as well. And so generally, we haven't seen too many major cracks in the economy. Now, I do think as we move forward, with perhaps 200 basis points plus of Fed tightening, what we'll really be watching is two scenarios unfold. One would be that inflation indeed does roll over by, towards year end, and we're hopeful that scenario plays out. The other is that perhaps growth starts to roll over more meaningfully. And so I think investors are still on the fence as to which direction this could head. But in either case, we could see long-term yields start to move lower at some point, really if either of those scenarios play out. And so for us, I think generally if inflation does start to roll over, some of that pressure is taken off the Fed. That is really how you kind of execute a soft landing and probably much more welcomed by markets than, of course, the other scenario.
Mona, thank you. As always, Mona Mahajan there of Edward Jones. Lisa, this is what people are waiting for, to start buying those big tech names again, to see that deceleration in growth at the back half of this year, and perhaps the Federal Reserve that has to back away, and then you can step back in. They're just not ready to do it quite yet, because maybe that's not the scenario that emerges in the back half of this year.
The conversation has shifted actually away from that narrative that we began the year. This is my sense. On the margins, people are now thinking about perhaps even higher yields over the longer term because of this idea that even with the Fed being as aggressive as they are, it is not necessarily considered aggressive enough by many people, Bill Dudley among them, and many others would agree, to curtail inflation that really has been influenced by a multifaceted number of factors.
Barclays picked up on that point. They went long 10-year treasuries at 260. Looking for some more flattening, some more inversion. They've backed away from that in the last 24 hours, exactly because of what you described, Lisa. Yields up by 3 or 4 basis points on a 10-year this morning, 288.77 for our audience worldwide on TV and radio. Good morning. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Ukraine says Russia has launched a full-scale offensive to take control of the Donbass area in the eastern part of the country. Russia has made the capture of the Donbass its main goal in the war, now that it failed to seize the Ukrainian capital Kyiv. The attacks are taking place along a front of more than 300 miles. St. Louis Fed President James Bullard says the central bank shouldn't rule out rate increases of 75 basis points to fight inflation. In a presentation to the Council on Foreign Relations, Bullard said the Fed needs to move quickly to raise rates to around 3.5% this year. He also said that talk of a U.S. recession is premature. Most major U.S. airlines are no longer requiring travelers or employees to wear masks on domestic and some international flights. That came just hours after a federal judge overturned a mandate for passengers to cover their faces. The airline industry had lobbied the Biden administration to ease that rule. Meanwhile, Uber is also dropping its own mask mandate here in the U.S. Johnson & Johnson has cut its profit forecast for the full year. The guidance missed the average analyst estimate. Meanwhile, J&J is suspending its guidance for COVID vaccine sales because of unclear demand and global supply surplus. And Apollo Global Management is interested in helping finance a bid for Twitter. Bloomberg's learned that Apollo could provide Elon Musk or another bidder like private equity firm Thoma Bravo with equity or debt to support an offer. Twitter shares posted their biggest gain in 2 weeks on Monday after the company launched a poison pill defense to thwart Musk's bid. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
The array of disruptions from China's new lockdowns, from the impacts yet to be fully felt of the Russia-Ukraine war on food prices, on global supply chains. All these are risks on the downside.
The wonderful, the brilliant Carmen Reinhart there, the World Bank chief economist, off a big downgrade for their global growth outlook, Tom. The China GDP outlook cut at Bank of America as well from 4.8% to 4.2% this year. Their base case, their bear case, 3.5. Can you imagine a three-handle, Tom? We talked about that earlier, a three-handle potentially in China this year.
John, can we do a victory lap right now?
Who for?
Not for John Farrow. We usually do a victory lap for John Farrow, but let's do it right now for Carmen Reinhart.
Sure,
John.
yeah.
Reinhart and Reinhart, not Reinhart and Rogoff. Reinhart and her wonderful husband, Vincent Reinhart, an essay that came out that made a splash, and a lot of people said, come on. The pandemic depression, the global economy will never be the same. And they're like a piñata on that, John. They took a lot of heat for that, not gloom, but caution of gauging where we would be back then 2 years from now. She looks like a genius now with Vincent Reinhart.
Well, Tom, to Reinhardt's point, we haven't fully realized the risks associated with some of the topics we talk about every single day, Russia included. Maybe that's still to come.
World Economic Forum this morning. John Farrow will have that on one of his properties. Look for that in the 9 o'clock hour as well. Right now, Joe Matthew, sound on in Washington. And Joe Matthews, you know there can be one sentence in the morning research where you just stop. Greg Villiers made me stop today, 4 days before Thanksgiving, after the election. The President of the United States will be 80 years old. Everybody in your world knows that. What's it mean for the Democrats? What's it mean for the Republicans?
Well, the unspoken conversation that this president will not likely be running for another term, although he did suggest pretty recently, Tom, that he would be lucky to run against Donald Trump again. And that's what you have to do. My goodness, you can't come into the White House as a lame duck president here, but add a couple of more years and imagine how brutal that campaign would be in 2024, whether it were against Trump or anyone else. This is difficult for a young man, and a lot of questions about how many years Joe Biden has left in that job.
Joe, remember when a guy named Tsongas showed up in Boston politics, or any of the other geographies of America, or John Farrow's United Kingdom? Young people used to show up and run. Why is your city, you're the youngest guy in the Beltway, why is it a geriatric Washington?
It's a great question, and I'll tell you, if Republicans get their way and they turn over the House and they start instituting some term limits on chairmanships, that might turn things around a little bit. But I think we go through cycles like this. If you go back to 2008, for instance, you know, it was the young Barack Obama who was too young for the job, and he inspired a lot of younger lawmakers to come to town. It was the Republican young guns before that, remember? And these guys like to hang around for a while. If you talk to Thomas Jefferson in the old days, the idea was someone puts their career down for a minute, comes to Washington, represents the people, acts as a politician, and then guess what? Goes back to what they were doing. That doesn't happen very often.
Joe, aren't they all on recess right now? Is anyone in Washington?
Not so much in terms of lawmakers. It actually has been pretty quiet. The biggest event that's happened here the last week was the Easter egg roll at the White House yesterday. There were families everywhere, but the lawmakers are still engaged, and this White House is engaged with them from a distance. The president today is back on the road, as a matter of fact. Even he is leaving on his way to Portsmouth, New Hampshire, to trump the benefits of the infrastructure law, although it's not lost on me that that is also home to the Portsmouth Naval Shipyard, one of the most important installations for upgrading, revitalizing our nuclear submarine fleet. They're in the process of investing over $2.5 billion to upgrade that facility. The president will be right there this afternoon.
Well, Joe, that's where I wanted to go, this idea of how engaged lawmakers are, even if they're on break or even if they're concerned about the midterm elections or finding someone younger going forward, how engaged they are at a time when people are talking about the U.S. helping with supplies of natural gas, whether it's to Europe to help them really remove their dependency on Russia, or whether it's really increasing production of grains so that they can really feed a lot of the nations that are running into some issues. How much is there a willingness to spend at a time when spending is being blamed for a lot of the inflation that we're seeing now?
Very little willingness. I mean, you're not going to get Joe Manchin on board, Kyrsten Sinema likely on the Democratic side. Republicans wouldn't even get together on a COVID funding bill here because they didn't like the fact that it wasn't coming with offsets, and some of the ways that this came together, it's resulting in supplies running out here. We talk to lawmakers every night on Bloomberg Radio. They are engaged, not necessarily on the issue that you're talking about. I think the next likely thing might be a sanctions bill to codify what the administration has already done.
Just quickly, Joe, did that judge yesterday in Florida do this administration a favor?
Boy, that's a really interesting way of looking at it, right? You go into the midterm elections, you take this issue off the plate of the Biden administration. Jonathan, I think you're onto something there. It also helps to, you know, if you're not going to go into a lawsuit here, put some questions around the authority of the CDC. That's the potential downside of this.
TK, you wanted to jump in?
No, Joe is just fresh and perky this morning. I think it's John. It's because of after Patriots Day in Boston, which is a ritual, he's got the glow and Narragansett Lager beer wrapped around him this morning.
The Sox didn't even win.
Too chippy.
Is that a man who did not run the marathon, Tom?
Oh, I thought about it once. No.
How many years ago is that, TK?
It was a few years ago, folks. It is so... Joe, explain that hill in Newton.
Heartbreak Hill. It's not too late, Tom. People do this late in life. Maybe you and I'll meet you there next year. We can start a couple months of training together. We'll be the last to arrive late in the dark of night.
Pharaoh's going to be pushing me in the cart. Like,
I'd be very happy to stand at the end with a microphone, Tom, and interview you after that one.
Oh, that's great.
We're going to replace the Tang with Gatorade that morning.
Can you do that voice again? Is that your accent at the end of a marathon, Tom? Joe Matthew, thank you, sir. Sound on a little bit later. Bloomberg Radio, weekdays at 5 p.m. Eastern Time. Tom, I got you the average age of the Senate, just for you. Do you want it?
No, what is it?
62.9 years. Average age of Parliament in the UK, a little more than 50.
Yeah, okay. You know, I don't know. I like what Joe Manchin said. Joe Matthew said. What a Joe Manchin, Matthew. Okay, I can do that. It's like Washington and Wall Street. I like what Joe Matthew said there about term limits for chairmen and chairwomen.
That was a mistake I made yesterday. You're bringing that up from yesterday.
I'll bring them up. Could you get me a mistake? The last time Farrell made a mistake was 6 weeks ago. Can you get me that, please? Okay, thank you.
You want to play it?
Yeah.
Clip the sound?
Yeah, you know.
Are you suggesting the president's too old? Is that what you were asking 5 minutes ago?
No, I'm not suggesting that. Come on, it's a grind, John. I mean, forget about the second term, and we all saw President Reagan and President Bush Sr. as they aged, Woodrow Wilson. I'm sure there's issues in England as well, John, but come on, 80 years old.
Well, I'm asking Tom because after the midterms, are we going to have that conversation about whether he's going for that second term or not?
Yeah,
does that kick in straight away?
I'm going to be here at 80. There's no question about that.
I have no doubt about that, Tom. Tom Keene, Lisa Bramerton, Jonathan Ferro. I mean, I was just asking about the president, of course, not asking about Tom and his future plans on this show. What he might do in the future. Ramo's got no thoughts on this.
No.
No publicly available thoughts, anyway.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Live from New York City this morning. Good morning on TV and radio. Here's the price action. This Tuesday morning, we are slightly negative on the S&P. We're down 2 points, a negative 0.04%. On the Nasdaq 100, down about 1/10% on the session. On the year, down almost 15 percentage points. A little bit later after the close, we'll be talking about Netflix. That has had a dreadful year, down by more than 40%. That's the equity picture. We'll pick up on that in just a moment. I want to talk about two things in the bond market. I want to start with the Treasury market first and the 10-year and this breakout we've seen through the month of April so far, a 50 basis point move. And Lisa's picked up on a story that I think is really, really important. Bramo, it's something that Barclays speak to as well. Just maybe some doubts that this Federal Reserve is going to step up and do what's needed to cap inflation. And that started to reinvigorate this sell-off in the back end of the yield curve. Now, that's one view from Barclays and another view that you've been building on as well.
Yeah, frankly, this to me has been a huge shift. So even though people were expecting that later in the year, people would start to get worried about a growth slowdown and go into longer term treasuries, that isn't happening. And it's also because it's a global phenomenon. It's not just the US with rising yields and rising inflation.
It's Germany too. So we've had a 50 basis point move on a 10-year treasury this month alone. We've had about a 40 basis point move this month alone on a German 10-year. We have had a 2 basis point move on a Japanese 10-year. That's the global story here. And you see it again this morning. 10-year yield up by 9. In Japan, it's hard to tell whether the Japanese government bond market is closed or if it's open and no one's really doing anything because the BOJ won't let them. And Tom, that's a factor in the FX market. With dollar yen on the move for a 13th straight day of yen weakness against the US dollar. And when you hear the Japanese finance minister saying, we'll look at this with a strong sense of vigilance, and you look at what's happening in the bond market and what they're going to do, or rather not going to do with policy this year, it's hard to push back against this one, Tom, and this one is breaking out in a major way over the last couple of weeks.
The now has been discussed for 10 years, John, even longer than 10 years. I remember talking to Martin Feldstein, the late, great Martin Feldstein of Harvard, about this. I'm going to think, John, 15 years ago, waiting and waiting and waiting for that differential to be there to show the nakedness, if you will, of Japan. Well, there it is. We're there now.
Dollar yen with a 128 handle. That's the cross-asset price action. Let's get you some single names, some movers. We can say good morning to Romain. Good morning, Romain.
Hey, good morning, John. Let's take a look at Johnson & Johnson. The shares only down about 0.3% right now in the pre-market, but the bloom really does seem to be off the rose when it comes to these COVID-19 vaccine and treatment makers. Johnson & Johnson reporting revenue from that COVID-19 vaccine of about $457 million in the most recent quarter. That's $300 million below what the street was expecting. The company also pulling its